Good evening, everyone. So welcome back in our very important discussion session on the topic of supply. So dear participants, students, as a protocol, I would be first taking up your questions, queries, if any, and then we will take up the topic ahead. Yes, very good evening, Yogesh, Geet, Swaminathan. Let me know first your queries. We'll take up your queries first and then we'll proceed with the further part in the syllabus. Tell me.
Sir, there is one confusion, myself Pitambar. Sale of completed building.
Hello. Yeah, tell me.
Sale of completed building means after the completion certificate, provided entire consideration is received after the issue of completion certificate. So normally what happens, we give advances first, okay, in the case of this building and all cases. So how will it be in this? That?
See, actually, when we'll go to schedule 2 today, you'll get more clarity on this point. But since you have raised this query, let me answer you upfront. Just a minute.
Sir, with respect to Bidambar query, my understanding is that even single rupee is received prior to completion certificate or the occupancy, the entire amount of the consideration will be the taxable as a service.
No, I think Pitambar's query is firstly regarding when it will be taxable, because as he rightly pointed out, many times we pay advance. And we read in schedule 3 that it will not be taxable, it will not be a supply. So I think Pitambar's query is more about firstly when it will be supply, when it will be not. Right, Pitambar, if I'm understanding your query correctly?
Yes, sir. Yes.
See, I'll first upfront answer your query. Then we'll go to the details when we go to schedule 2. So basically, now this is just for your interest since this point is raised. This is a legacy dispute right from the earlier VAT era, continued to service tax era, and now you can say it was concluded in service tax era in the year 2010 from the amendment made in that particular period service tax law, and now continued in GST law. So basically, what is the conclusion today which is being followed? The conclusion is like this, that whenever you are booking a flat or a shop or anything in a under constructed project. What is an under constructed project? Under constructed project is a project of which the builder has not yet received the completion certificate from the respective municipal authority of that particular city, whoever is empowered to do that. So the point is, if you book an under construction property, right, this is very important, of which the completion certificate is not yet given, then that particular unit, I'm using the word unit because there would be other units also, but the unit which has been booked before the completion of construction, that unit would be liable to GST, and those units for which the booking will be received after the completion certificate is received, not even a single rupee advance is received, everything is received only after the completion, that unit will be taxed later. Pitambar, I hope I answered your query.
Yes,
is there
sir.
something left?
No, got it.
Yeah, but then if you ask me, sir, from where is this coming? That is coming from schedule 2, which is our step 3 today, right?
Thank you, sir.
Now, just to make a basis, in the previous class, we started understanding supply in detail technically. And I said, for understanding and applying supply, you should go stepwise. Step 1 is where you will check whether your transaction falls in no supply, for which there are 2 things. One is schedule 3. The other is notification and also backed by some circulars. If your transaction is not fitting here, then you have to check whether your transaction fits in the definition of supply, which then is made up of broadly, actually there were 3 clauses. Now one new clause has been added, which is actually more of a curative clause. And if you justify here that yes, my transaction is a supply, in step 3, you do classification. That is, you determine whether it is supply of goods or whether it is supply of service. Now we completed up till this part in the previous class along with all the background of supply and rather how GST was developed. So I think today, if I start with the second step, it should not be a challenge with everyone because everyone is in sync with the subject and the topic, right?
Yes, sir.
Yes, anybody else has any query relating to whatever we have studied till now? Any particular point you want to understand, discuss before we proceed? Okay, all set. Now we are in our step 2. What is step 2? Now we have to check, are we fitting in the definition of supply as envisaged under section 7 bracket 1 different clauses. In fact, we had started reading this just to make a background for whatever we did in the previous class. Now in section 7.1, you have broadly 3 criterions A, B and C to determine which activities would be considered as supply and under what scenarios, that is satisfying what conditions. Later on, as a curative measure, they added one more clause, double A. What is that curative measure? That we will discuss. Now, starting with the generic meaning of supply, because these two are the special meanings of supply or the special scenarios of supply. Now, what is the generic meaning? Where 90% of all the supply transactions would fall. So today, if anything has to be supply or is regarded as supply, is basically coming out of this clause A. Now, what does clause A says? What is supply? It again makes it circular by saying it means or it includes all forms of supply. So I replaced it by another word in the last class, if you remember, that is transaction. And because there is a concern or requirement of business, I added one more word, commercial transaction, just to make it simplified and not appear like a circular definition. So now what or how to interpret supply? So you have to first check, is there a commercial transaction? And the transaction should be of the underlying taxable object. That is, it should be either of goods or of service or a combination of the two. Now, what is goods? What is service? That has to be discussed separately. But for the time being, just to set the tone, it is all movable items, including actionable claims. Now, this is a very interesting difference between the definition under the previous taxation laws like sales tax, VAT, and the current GST law. Under the previous taxation law, the definition of goods was very similar to that under the present GST law, with one exception, that actionable claim was kept outside goods. However, we have included in the definition of goods. So we require few basic things to be called as goods. It should be movable. It will or it may include even actionable claims, but it will not include two things. One is securities and one is money. So if you sell or if you transfer, if you barter, that is do any commercial transaction of security per se, no GST on that. Similarly, if you deal in money, no GST on that because it is neither goods nor service. How is service defined? Service is defined to mean anything other than goods. Now, this is a very interesting definition, and I'm sure in times to come, you will find some very important and interesting interpretations coming out of the Honorable Apex Court. This may take some 8 to 10 years. But the issue will be that by this definition, the legislature has tried to cover everything under the sun in the definition of service if it is not goods. But can a definition include everything under the sun in this particular word of service? That is what will be tested. But I'm not going into that. But just for those who are more interested in the litigative or the legal analysis part, just keep this in mind that this terminology, anything, and then it says other than goods, this has a lot of relevance, which will be coming up in the later future course of time. In any of our future discussion, wherever I feel I can connect to that legal terminology, what is today under the litigation, I'll definitely share. For the time being, what is the definition of service? Anything other than goods. And then it says it also excludes securities and money. So both these things are neither goods nor services. Hence, the transaction in these cannot be a supply under 7(1)(a). However, having said this, the definition of service further proceeds to say, however, even though these two are kept outside, but anything relating to this is not outside. Like you are involved in transactions relating to securities, like as a share broker, you are in the transaction of arranging or facilitating the trading of securities. Your transaction is a service. It is not excluded. So trading in securities, and now I'll connect it to the previous class, trading in vouchers, all these are per se outside GST. However, anything which is supporting those transactions, which is ancillary to those transactions, which is not transaction of these things per se, but supporting in the form of arranging, facilitating on commission basis, brokerage basis, that will be goods or service. Here it will be service. Similarly, in case of money, giving or taking money per se cannot be a supply. In fact, money will be the consideration for supply. But where you are, again, lending money, that is where you are giving money for use, or where you are doing the exchange from one currency to another, and all this is done for some consideration. Like here, for lending, the consideration is interest, and here for exchange, the consideration is some fee or commission which is charged. This will be a service. So this is very important analogy that you should now keep in mind, because this is related everywhere, like how we discussed the important amendment in the previous class relating to voucher. So per se security, per se money is not taxable because it is neither goods nor service. Hence, it is not a taxable object. Not a taxable object. Only supply of that cannot make it taxable, because you require a taxable event which is supply plus taxable object, means it should be good service. However, other transactions supporting this will be either goods or service. Generally, it would be service. And if you satisfy the other conditions of supply, those transactions would be leviable to tax. Anybody would like to share something relating to what I just discussed on interest and this? Students, there is some specific input relating to interest. There is some specific input relating to this. If anybody would like to share.
Sir, interest is exempted from GST.
This is what I want to hear. That is why I said if any input is there. Very good, Swaminathan. Can you just elaborate on this?
See, actually, interest, when we are getting loan, the interest is exempted from tax. But the services what they are providing, that is under the GST.
Correct. Means which service?
Service means, say example, whenever we are taking the DD, the DD commission is charged by the bank.
But then anyways, it is not loan, na? Anyways, it is not loan.
Yeah,
DD
not loan.
From your own money. So there is no question of loan in that, right?
So say example, for the processing fee, what we are paying while taking the loan, for that processing fee, we need to pay the
GST.
GST.
So For interest, as rightly pointed out, there is an exemption. But again, understand, students, this is what I wanted to hear from someone so that I could explain one more point. See, how do you proceed? We first say that there should be a transaction, which is called as form of supply. Once there is a transaction, you analyze that whether it fits in the section 7 requirements, considering everything, schedule 3, no supply, everything, or it does not qualifies as a supply. Now, it will not qualify as a supply for two reasons. Either it is no supply because of schedule 3 or any notification, or either because it is no supply because it is not satisfying any of the criterions given under 7.1. So a transaction can be no supply for two reasons. Either specifically it has been listed as a no supply transaction, or it is not fulfilling the criterions under 7.1 clause A, B, C. If both things are absent, it means the transaction is a supply, assuming the other requirements, as I said, of 7.1, that is goods, business is satisfied. Otherwise, anyways, it will not be. Now, importantly, once it is a supply, then you should proceed to determine whether that taxable or exempt, or it is a non-taxable or non-leviable supply. Now, what is non-leviable? Non-leviable is something which is outside the scope of section 9, like supply of alcoholic liquor for human consumption, and as on date, those 5 petroleum products, they are for the time being non-leviable. Others are leviable, and within leviable, it will be taxable or it may be exempt. So this is how you process. Right now, we are only on this step. So we are not talking about whether it is taxable or exempt, but just it is important that we, since being at final level, we have our understanding complete. So I just thought I will raise this question, and it is rightly pointed out by Swaminathan that interest is exempt if it is for a loan or a deposit or an advance. Importantly, certain interest will always be taxable, even though you can call it as loan, deposit, advance. That is for credit card, because that has been kept outside the exemption. So credit card interest is taxable. Other than that, loan, deposit, advance interests are non-taxable. Other than loan, deposit, advance, if there is any other interest, like interest for making late payment of your consideration. So I have supplied you some goods or service. The credit period is 1 month. 1 month is over. You delay by further 1.5 months. I charge interest. That is not exempt. That is taxable. Correct? Similarly, when we talk about exchange of money for some fees or consideration, which is a service because it is fitting in the definition of service. However, again, there is an exemption. So I'm just trying to highlight that right now we are not focusing much on the exemption part because we are still on the prior step. Before deciding the exemption, we are on the prior step, whether it is supply or not. But still, just to keep yourself abreast, those whoever are interested may today go back home, make a noting of this, and go back home and find out what is the specific exemption entry for interest and for this exchange of money consideration. Fine. Now, very important in the definition of supply is that there should be a transaction of goods or service which is made or it is agreed to be made. Now, this is where a very important analogy comes, that it is not necessary that a transaction will be taxable only after it is made. Even when you agree to make it, and when you agree to make it, when you get an advance. So even a transaction which would be made in future can be leviable to tax because we are covering both made or agreed to be made. Just this is a point. This will be useful when we are discussing the concept of time of supply. Then another requirement is the transaction should not be a free transaction. It should be for some consideration. Now, this condition has been countered by clause C, where few activities, few transactions which are specifically covered in Schedule 1, even made without a consideration, would be considered as a supply and taxable. But barring these few transactions, which we are going to study in Schedule 1, all other transactions, if made for a consideration, can only be considered as a supply. So transactions other than Schedule 1, if made free, will not be leviable to GST as it will not be a supply. Next interesting thing is it should be made by a person. Now, person's definition is the same as you study in income tax. It includes individual, HAF, partnership firm, AOP, BY, etc., etc. Only interesting difference is in income tax, government, whether central, state, is not considered as a person. Interesting. But if you see the definition of person in GST, you will find that the definition of person also includes government. So this is a striking difference between the income tax and GST definition of person. Again, you may make a note of this, and today after the class, you may just open both the acts and compare it, right? Next is an interesting point again relating to this. Now, this is my question to all of y'all. Can there be a supply where there is only one person? Or I'll put it differently. Do I need another person for there to be a supply?
There is another person to be a supply, sir. In custom earlier, we have that captive goods. See, when we are
Customer
consuming
excise.
our
Sir,
yeah,
customer
excise, sorry, excise. In excise, we have the concept called that captive goods. We are manufacturing the
captive
goods.
consumption. Captive
Yeah,
consumption.
yeah, captive consumption. When you are manufacturing the goods and the same goods, when we are use it, our own purpose for the business, that is the excise duty is applicable for that. But
Super.
in GST, it is not applicable. See, the person to person is mandatory.
Exactly. But I'll give you the cases where it is not in GST also, but you're right. So basically what Swaminathan has identified, very important point, and that is why I raised this point, because when we read excise law, the prior excise law, you will find that even if you have not sold it to anybody outside, merely because you have removed the goods from factory, because there the levy was triggering on manufacture, but the tax liability was triggering on removal and removal from factory. And within that, there was a specific mention that even where the goods are consumed within the factory, they would be deemed to be removed. Interestingly, when they were saying removal, removal need not always be for sale. So where removal was for reasons other than sale also, still it would trigger excise liability, because for excise, there was no requirement that there has to be two persons. Similarly, Swaminathan also made a reference of customs, but he could not justify. Even in customs, there is no specific requirement of there being two persons. I'll give you the best example. Those who just by chance know custom law, when you are coming from a country outside India into India and you bring your own luggage with you, there is no two person. It is your luggage you are carrying from outside India to India. There can still be customs duty. So again, in case of customs, there is no requirement that there has to be 2%. There is some seller sitting outside who's selling goods to India and you are importing the goods in India. Not a compulsion. So both in excise and customs, there could be a tax even where there was a single person. However, under GST, even though it is not specifically made out here, but if you see the transactions which are covered, transfer, sale, barter, and if you go to the definition of these transactions in the respective acts, like Sale of Goods Act or Transfer of Properties Act, or the I'm forgetting that name, where all these easement and all these definitions are covered. So there are different varied acts where you find the definition of all these transactions. In those definitions, like for definition of sale or transfer, from there, we come to the conclusion that there has to be an opposite person. So for the time being, I'm giving you one more condition, though this will be counted very soon when I go to schedule 1. But for the time being, I'm saying that there has to be another person, right? And then comes the most future litigation point, that the transaction should be in the course or furtherance of business. Now, all three terms are very interesting. First is the phrase in the course of, second is the phrase in furtherance of. Both these phrases are not defined in the GST law. And then course or furtherance of business. And then you have the definition of business. I'm just going to go through the definition in a minute. But before that, let me again make out this. For the purpose of earlier laws, whether it was excise, customs, or even for that matter to a great extent service tax, there was no specific reference of business. Though in case of VAT, we could find that difference because there was a concept of dealer over there. And when you go to the definition of dealer, you find that reference over there. However, there is a specific reference over here. But if I compare it with excise, if I compare it with other laws, what is striking difference is in excise, there was a pinpointed requirement that it should be for manufacture or related to manufacture. However, here now they have widened the concept and they have said anything which is in the course or furtherance of business, that will also be a supply. So this is on the outward side of business. Similarly, when we'll go to the inward side of business, that is where you get input tax credit for all your inwards, that is purchases. Over there also, this phrase is used, and that is going to be a very big area of dispute, litigation, and lot of deliberation in courts as to what is the meaning of the phrase in the course of and in furtherance of. I'll share my basic understanding of this. According to me, in the course of means when you are doing a business, if you can prove that this particular transaction, be it on the outward side or inward side, because on both sides you have this condition, is a transaction which is for this word, students, mark it, commercial expediency. If anybody wants to read more about this, go to the income tax law. The chapter is PGBP, that is profits and gains from business and profession. Over there is a lot of discussion of this in section 37 of the present Income Tax Act. We have a new proposed income tax bill, that is a different thing. But for the time being, we are referring to the present Income Tax Act. So section 37 of the present Income Tax Act, if you go there, related to 37, you get this particular word or phrase, commercial expediency. So what is in the course of? What is in the course of, according to my understanding, is where you can relate that, yes, this transaction has a relevance to my business. It may be a direct relevance, like it is a raw material, it is a final product, or there may be an indirect reference, like for the purpose of my workers, I have to provide schooling to their children. Now, schooling to children is not a direct requirement for my business, for running my business, but it is indirectly connected to my business because I need to have a decent and an ongoing workforce, and to keep the workers happy, to keep the workers engaged and attached, I need to provide some facilities, perquisites. So that should be in the course of business. So in the course means which is for commercial expediency, that is directly, indirectly linked to my business. What is in furtherance of business? This is something very interesting. Furtherance means that we are talking about some futuristic thing. Like, I'll give you an example. I carry out R&D, which may even fail. That is, there is no result. Now, there will always be a question, if it has failed, can you take it or consider it as something related to your business? Because ultimately it is yielding no results to your business, either presently or in future. Still, it will be considered. Similarly, when I'm doing anything which is for brand building of my business, maybe it is not going to give me any direct benefit today. That is also in furtherance of. So this is my interpretation of both these terms. We have a long way to go to understand what these terms are in the GST sense. That time will tell. Now, the transaction. Yes, beta.
Sir, furtherance के अंदर we can say that going concern concept is also included. That if we do research and development process, and in between we feel that this will not complete or this would not result in anything, then even though we continue for or we start new research and development on the same basis in place of shutting down that business.
Okay. I think your question will be answered once you read the definition of business, right? Because whenever we talk about going concern and all, it is all related to business. Fine. Okay. Anyways, I'm taking your point.
Okay, sir.
Yeah. So now what is very interesting is the extended definition. Why I'm saying extended? See, one is exhaustive. Exhaustive means it is very vast. Extended means it is covering something which is not business, but they are, you can say, forcefully including it into business. So I call this definition as an extended definition of business. And let me tell you, there is a very recent beautiful judgment which is countering this, which is on whether universities can be said to be engaged in business. And interestingly, the recent judgment says universities, whatever they are doing, cannot be said to be engaged in business. So, but this is obviously not accepted by the department and the GST Council. But recent, just I think it is not more than 2 months that we have this beautiful decision. But ignoring that, because these things will, as I said, now all these terms are yet to be settled. But just since we are at final, you are going to handle case studies, and also I'm more, for me also equally more important is your career step immediately after final, because immediately after qualifying final you get the tag of CA. At that time you cannot be saying that okay, I was not knowing this. So at least just for your knowledge, sorry, but I am very bad at recalling names. In the break I'll try to Gurram, I'll try to go through the WhatsApp or somewhere where I have stored that case, and I'll let you know the citation, right? Okay, fine. In the meantime, you all can also Google whether university is doing business, GST, something like this. You will get the recent judgment. Now, what is the extended meaning of business? Now, if you see, there is also a definition of business in the income tax law, but our GST law has taken few steps further. Now, what it has said that what is business is doing trading, providing service, engaging into manufacture, or engaging into specialized work like profession, or engaging into a business or a profession which is your lifestyle, like that of a sportsman, athlete. All these are vocations, or people who are into religious activities like Mahantas, Panditjis, Maulavis. So their entire lifestyle is linked to their work, that is vocation. Or even where you do something which is a one-time activity. So adventure is what? Normally, see, when we talk about these things, there is generally a presumption of continuity. But even in income tax law, they say even one-time activity can be business. It is not necessary. It should be continued. It can be like now we have Ganpati festival in many states. So people are putting up Ganpati stalls. This may be one-time activity, or this may be done only for a short period of time. Similarly, we have Raksha Bandhan, so people are putting Raksha Bandhan Rakhi stalls. We have kite festivals. We have so many festivals where for that specific period of few days, or let us say maximum 1 month, people set up a business. That is also business as per the definition. Then they are
Sir,
saying the activity of wagering.
should we say it a seasonal business?
Yes, you can say so.
Okay.
Yeah. Just a request, don't break my rhythm. Once I complete, then you may add. Fine. So then wagering, they are saying, is also a business. We all understand what is wagering. And then they are saying any other similar activity. And most important, whether or not you are doing it with a profit motive. Like all these trusts, Patanjali Trust, and all these trusts, when they are doing any activity of, like they are manufacturing and selling so many items today, there are other so many trusts or NGOs or NPOs who are engaged into providing service or doing trading activities, but their intention is for not for profit. Still, it is a business. And I agree to this point, because see, business, somehow we have been embedded in our mind that business means profit. That is not necessary. See, business means this: trading, service, manufacturing. It may be with intention of earning, or it may be with intention of furthering the benefit to society. But still, what you are doing is trading, what you are doing is manufacturing, so it has to be business. Now, what is interesting is they are further adding to this that any activity or transaction which is connected to A, which may be incidental or ancillary. So this is where now they are extending business. They are stretching far beyond your business. So if I am dealing in, let us say I am a professional, I am providing consultancy services, all types of legal domain services. Now every month I have lot of raddi which is coming out of my office because of the newspapers, some old books or old case files which I discard. Now, giving away or discarding that raddi is never my business. It is never my intention. It is not falling in A, but it is arising out of A because I am doing something which is A, and from A something is arising. That will also be considered as business as per clause B. Then in clause C, they have clarified that whatever we are referring to in A, all those activities of trading, commerce, manufacture, they all will be considered as business without looking at how much you are doing, how frequently, that is regularly or irregularly, you are doing, whether you are engaged it in continuously or on seasonal basis. So all these requirements need not be looked into. So any of your above activity, whether done one time, whether it is in a very small quantity, whether it is done without a proper continuity or regularity, all will be considered as business. So see, they are extending business to far stretch things. And that is why I'll give you an example of this, which is going to be very soon counted, and I'm sure there will be some logical outcome of this. I am a person, let us say pensioner, right? So I am a senior person, pensioner. I have a old plot of land in which I had invested during the time of my service. Now, for some want of money, I decide to sell this plot. Now, this will not be leviable to GST specifically because of Schedule 3. That is a point.
From where it flows.
Sorry, kindly keep yourself muted, students. So, when I sell this plot, it will not be leviable to GST because of Schedule 3. But right now, I'm not talking about Schedule 3 or not. I'm trying to explain you how they have extended the definition of business. Now, selling this plot is not anyways or can in any manner called as my business. Even in income tax perspective, it will be called as capital gains. It will not be called as business. However, because of this extended definition in clause C, any one-time activity like this may also be constituted or may also be regarded as business. And this is where there is lot of confusion and there is lot of dispute and debate on the definition of business. I believe in future, what will be coming out is that it has to be a commercial transaction. Commercial transaction means a transaction which is done like a businessman who has the intention of doing it in the form of business. Some one-off transaction or something which we put it in capital gains in our income tax law, I believe will not or should not be considered as business. For the time being, because of clause C, it is being regarded as business. Then there is a very interesting point, which I think will be connected to what Neha was trying to say, is that whenever you are engaged in either providing, that is selling or supplying, or acquiring, what goods, which may include assets or services. And very interestingly, they are saying which may be either in connection with the starting business or even with the closure of business. So anything that you do, like generally at the time of closure, you dispose of your assets and liabilities. You close the business and you dispose of everything. They are saying disposing of business, disposing of assets of business is also a business. So tomorrow, if I'm selling my business to you, why? Because I do not want to continue. Now just think about this. How can selling a business be a business? But because of this point D, even if you sell the assets of the business or if you sell the business itself because you want to close down, it will still be regarded as business. Interesting. Then comes this clause E. And related to this clause E is that new amendment in 71AA. What is that? We will read it in connected fashion. So I'll take clause E at the end so that you can understand how it is connected. Yes, Ayush. Now, clause F, again very interesting. Simply allowing someone to come inside a premises for some consideration, this will also be a business. Now, I agree to this for some extent because what they are basically trying to cover over here is like you enter some this exhibition where they have some entry fee, or you go into some there are activities where there is an entry fee. So wherever they are taking an entry fee, that is that particular amount is taken for coming inside. Whether you avail the facilities inside or not is okay. Like many times when you are having all these beauty contests or all these award functions, in order to get inside, in order to get a seat to attend that function, you need to pay. So that is all what is admission, and that is also a business, means regarded as a business. Then interestingly, when you are holding any office, then whatever you are doing by holding that office, that will also be in the course or furtherance of profession, and whatever services you are supplying. So basically, I'll tell you what this is. So let us say you are head of your society as a secretary or something. So you are holding an office, and which has been accepted by you in the course or furtherance of trade profession. So you are secretary of some trade body. So whatever you are doing as a secretary of trade body, that will also be regarded as business. Then when you are acting as a bookie, now what a bookie does, he makes you enter into a bet. That is what is a bookie. But a race club where these bookies are, they give the bookie the license to work as a bookie. So interestingly, the race club's activity of allowing you to become a bookie in their race club so that you can work as a licensed bookie. Now, bookies is a short form, the long form is bookmaker. So whoever act as a bookie, they have to first take a license. Then only they are authorized to undertake bets. So all these licensed bookies become licensed because the race club or such places, they give them that license. So the activity of the race club, which is only involving giving them license, so the activity of giving license is also a business. So in short, if you see, they want to cover everything under the sun in business. Why? Because firstly, they have covered it under service. But simply covering under service will not make it taxable, because in order to be covered under supply, it should also satisfy the business test. Hence, they are trying to now elongate and extend this definition to cover everything under the sun. Whether it is actually business or not, they are least bothered. And then interestingly, as I said a few minutes ago, in the definition of person, you will not find in income tax law government being covered. However, in the GST law and equally in excise or even in your custom, that is in short in all indirect tax law, you will find that government is also the part of the businessman, like in case of VAT in the definition of dealer, in case of GST in the definition of business, government is covered. So what they have clarified, that whenever any activity is done by government, be it center, state or local, in which they are not actually as a business, they are actually as a public authority only, that is also covered in business. See, where they are acting as a businessman, that is anyways covered because of clause A. So when government is into pure commercial activities, there is no question, that is business because of clause A. But where like government is constructing roads, maintaining all the infrastructure facility, that they are not doing as a businessman, that they are doing because they are the authority to do that. They are in fact doing it as a public servant, what we normally use a terminology in civics. So even those activities where the government is engaging as a public servant, as a public authority, doing that activity will also be regarded as business. It is a different point that later on it is kept outside because of covering it in notification, as we saw last time, that it will be regarded as no supply. And what is not covered in notification, later on we'll find that it is covered in exemption. But the purpose is that we want to first cover entire government activities, be it commercial or be it for public, firstly in the definition of business. Then whatever is for public, engaging as a public authority, what if you remember in the last class, I have given the term sovereign function, that we will keep outside GST either by way of putting it in no supply or by giving it a specific exemption. Now coming to the interesting point. Clause E, what it covers. Let me first give you a practical example before you read that. Now, the place where you are staying is normally referred to a housing society. That entire building or the complex where you are residing is governed by some housing society. Example number 1. Example number 2 is it also covers all types of what you can call them as social groups. Like you have the Lions Club, you have the Rotary Club, you have so many social groups. Now, all these are what you can call them as clubs, you can call them as associations, or like in case of your house, it is a housing society. Or for that matter, they have used the term any such body. Now, what this society or bodies are doing, they are providing some facilities or benefits to their members. And this is done by charging some amount, which may be called as a subscription, or for that matter, by any name. So basically, they are not doing it free. Like your society or housing society every month collect from you something called as maintenance. If you are a member of any of these Lions Club or any of these Rotary clubs, or for that matter, any such groups, they have either monthly or annual membership fee, right? In fact, adding to this, even our institute ICAI, once you become a member, in order to continue doing practice, you have to pay every year some fee, which is the membership fee and the certificate of practice fee. Now, all these are examples what fit in clause E. So in clause E, what they have tried to cover very specifically is the activities which these societies, clubs or bodies are doing for their members, for which they are charging some consideration. So even providing the facilities or benefits to their members will be regarded as a business. Again, if you see, none of these societies are actually doing business. It is just for running and maintaining the society. They collect the maintenance, and then that maintenance money is actually used mutually for the benefit of member only. But because of this clause E, it has been considered as a business. Now, I read 71AA along with this to give you the flavor of what that amendment is, and then we will see why that amendment is. Now, this 71A is aligned to that business definition. What it says. Now, we are reading 71A. So, we have covered 71 with all its components. Now, 71AA. How to read? Because it is first having this prefix. So, we read it from here. Supply includes. What supply will include? Besides A, which is the generic meaning, it will include the activities or transactions by a person, and it is done for the members or the constituents. So basically here again they are talking about the clubs and the society, etc. So where any activity transaction is done by the clubs and societies. I am reading this word person as clubs and societies so that you get the actual connection and feel. Though they have not used that because they want to make it very generic so that anything else can also be covered, but it is specifically for them. Other than an individual. So that is correct. That is why I said this covers club societies. Club societies are not individuals. They are a group or they are a body. So it should not be done by an individual. So it should be done by a body. For whom? For their members. Like again, our ICAI, all your Rotary clubs, your housing societies. And it is done for some consideration, which may be in monetary form or in any other valuable consideration form, like non-monetary form, which we say as something like they, instead of giving money, they have given in return something other valuable thing like barter. What is very important is this is replication of the definition clause which we just read from business. Now the question is, why was this again required to be specifically covered in the definition of supply? Because of this point of person. So we have already covered it in business. So the business test was getting satisfied. When you are doing something for your members, that is already satisfying the requirement that there has to be a transaction. Transaction should be goods or service. So it is service. So you are doing something for your members. So there is a transaction of service. You are a person. In the course of business is not a problem because it has been assumed by way of definition in the business. Swaminathan, just give me a moment. And everything is going well as per your wish, you are the legislature. The only challenge came up was this. It came up in a very famous, again you can refer this, decision or judgment of Kolkata Club case. Now again it is talking about a club like your Rotary Club or any of these clubs, where the Honorable Court came up with a very important point, which is mutuality principle. What is this mutuality principle? Again, this has been deliberated a lot in income tax law provisions, where we have concluded in income tax law provisions that there cannot be income where there is a mutuality. What is mutuality? Mutuality is we all are part of one common body, one common group, like our housing society. So let us say we are all the participants in this housing society. This housing society has 100 flats, so 100 members. Now, in order to maintain this housing society, we need a security, we need a watchman, we need a sweeper, cleaner, we need electricity. All this amounts to roughly rupees 1 lakh a month. So what we simply did, we simply divided it by 100. We asked everyone to contribute 1,000. So every one of us, that is all 100 people, are bringing in 1,000 rupees as a common pool. And what this common pool of 1 lakh rupees is used for, it is again used for us only. How? It is used for maintaining the building, all the facilities in the building, which is for our own benefit. So it is, I am contributing money for my own purpose. The only difference is that in the eyes of law, there are 100 different persons who have made us a concept called as AOP BOI, if you recall the income tax terminology, which is your society. So they are giving this money to the society, and the society is spending this money for getting the services of maintenance, sweeper, electricity, etc., etc. Now, what or how they are perceiving this transaction? They are saying that this is a separate person, this is a separate person, or all of us are separate. Separate means separate from our body. And when the body is collecting this maintenance charges, it is collecting because it is giving us a supply. Supply of what? Supply of this maintenance facility. So we are getting some facility. If you remember in the above definition of business, the word facility or benefit was used, which they have further advanced here by using the word activity. So they are not even getting into that further dispute of whether there is a benefit or not. It is simply saying where these clubs or societies are doing any activity, and this activity is done for their members or the constituents for some money. Again, they are very thoughtfully avoiding the word consideration. Why? Because they want to overcome what has been given in this judgment. Now, interestingly, if you see, they have explicitly tried to overrun the judgment by adding this explanation. What are they saying in this explanation? For the purpose of this clause, that is this AA, it is hereby clarified that notwithstanding anything contained in any other law, like income tax law or other law, and in fact, most strange is anything which is given in any judgment, decree, or order of the court, the person and its member. So read it like this: the society or the club and its member shall be deemed to be two separate persons. Because what is this mutuality principle saying? The mutuality principle says you and your society are one and the same. So whenever you pay something to the society, it is you are contributing. There is no consideration because you are not paying to the society for getting any specific service. It is just you are contributing for some common fund, and that common fund is for your own benefit. So it is like this: you are keeping the money in some common pool for your own benefit. So who is the other person? It is you only on either side. But to overrun that particular part of the judgment, they have specifically said that this explanation will override all judgments. It will override all other laws. And most important, we will deem that you and the club are two separate persons, and there is a supply of activity or transactions between you both, and that shall be deemed to take place from one person to another person. So in short, they are trying to overrun the whole concept of mutuality, and they are, or they have introduced this clause. If you see the timing of this, when AA was introduced, it was introduced exactly after the judgment of the Kolkata Club case. And it is very explicitly clear from the explanation that it is done to overrun that particular judgment, right? It is very important, students. Again, it is an amendment, and in an exam, you should expect a very straightforward question of a club. And in that, they will purposefully try to entice this particular point that there is mutuality, so there is no tax. So how the question may be framed, that they will give you example, a same example like I gave you, which will be of some club or a society like a Rotary Club, where they are saying they are collecting membership fee from the members, and some advocate or consultant has said that there is a mutuality, so there is no GST. Comment. This will be your question. So then your entire discussion should be like this: that supply, in order to be a supply, you require to satisfy the test of, first there has to be a transaction, then second is good service, third person, fourth consideration, fifth business. Now business is satisfied because of the explicit inclusion of that clause F, which says that all these activities will be regarded as business. All other tests are satisfied. Only there was an issue whether the club and its members are two separate persons. That has now been overridden by 71AA. And let me tell you, 71AA has been introduced very recently, but it has been made effective retrospectively for 2017. So effectively, it is in place from day one of the GST law. So you will say that because of this specific inclusion and making it retrospective, hence it will be leviable to GST. Right? Yes, Swaminathan. Now you can take ahead your point.
Yes, sir. It was very clear. I was trying to refer the Calcutta.
Hand, so.
Yeah. I was trying to say that case laws, Calcutta Club versus the Apex Court. Because of that only, this explanation, this subclass AA and subsection 1, class 1 of the 7 is inserted. Yeah, it was very
if
well.
You have
very
the
well.
Citation, please put it in the group. If you have citation, please put it in the chat so that others can read at their comfort. I'll request students that please take out time to read extra so that it will be useful to you whenever you are actually understanding the law further. Obviously, this is only for them who want to have more in-depth knowledge beyond what will be asked in exams. Whatever is relevant for exam, I'm covering that. Even I'm covering more. But I know you are not able to see others chat, but if somebody puts it, I'll copy paste. When I'll paste something, it will be visible to all. So don't worry. If anybody pastes it, I'll copy it. So if anybody has that judgment, you can do that. And if anybody has got that university judgment, please put that also. I'm not able to recall the name. If I'm not wrong, it is, I think, Rajasthan or Karnataka High Court judgment. Okay, yes, I have a very interesting question. Please, go ahead, sir.
One thing, by this,
go ahead.
Suppose some kind of activity like fund pooling is done by an HUF.
You're not audible to me.
Hello, am I?
Yeah, please. Yeah, now you're audible.
Same kind of activity, suppose fund pooling and some kind of beneficial activity is done by HUF, then will it be attracted by this clause to its like close family members?
Well, now see. So we have to now we have a very interesting fact scenario. Let us try to fit whether it fits here. It says activity transaction by a person, and it has said other than individual. We are very sure HUF is not an individual, and it is for the members or the constituents. So definitely all the family is the members of the HUF, and it is done for some cash. Now you will have to first, because practically I have not seen any such example, but there can be that where all the members of HUF are contributing for some common pool. Like let us, I'll give you example. So there is a property of the HUF which requires an overhaul, and all the members are contributing some money for overhauling of that property. Whether it will get fit here, strangely, it appears to be yes. It appears
That's
to be.
why I also thought it is covered by in both business and air. If I was reading that, it is getting covered.
It should get covered. Only when I'm reading the definition of business over there, it is still more restricted because they have specifically used the word club over there. They have specifically used the word society over there. So then the question is, can an HF be called as a club or a society? So if you read the definition of business, see, this point is introduced after the judgment. So the legislature was very thoughtful in making it very vast by including a generic terms, right? Like as I said, they did not use the word consideration specifically. Like over there, if you see, there was subscription and all, right? They have purposefully used the word for cash or deferred payment or other valuable consideration. So it may not be specifically consideration. Why? Because when you are contributing to a common cause, it is not a consideration. So they have thoughtfully evaded the word consideration, which is actually there in the definition of business. Plus, they have thoughtfully, here they have purposely used the word activity or transaction. Over there, they have used the word benefit or facility. So that is where they have very thoughtfully expanded this, but that is not there in business. But fine. See, that can be argued that it is covered over here. Though I, as a student of law, if I can call myself, I believe that it should not be taxed because
Yes,
mutuality principle
now,
is
now I also get, because there in the definition of business they have written any such body. So by the rule of interpretation, the generic word will take the meaning of the words
specific.
preceding that.
Okay,
Yes.
very good, Pitambar. So it means HUF will not be covered. This is what you are concluding, right?
Yes.
So Pitambar,
Because
can you tell me that that interpretation rule, it is called something? What you just said, it is called something.
Erusdum generis, something like.
Very good. Enjusdum generis, my spelling may be slightly mistaken. So what is enjusdum generis? It is this is a, you can say, legal terminology, which means that, like how Pitambar was explaining, there are few specific words: club, society, and then the word is any other body. So this generic word will draw its meaning, will draw its color from the specific words, and then HF should not be covered in that. So that is how we interpret. So these are some interpretational rules. Very good. So this is what is 7.1AA. Now in 7.1b, in these special cases of what is supply, they have covered the case of importation of service, but I will deal with importation of service separately because you'll find some reference of importation of service in 7.1c also. So once we reach there, I'll complete 7.1b and c collectively. So now let us go to the next special case of supply. Now what will supply include? Supply will include activity, those which are specified in Schedule 1, which are made, agreed to be made, even without a consideration. So in short, 7.1c is trying to override 7.1a. But what is very interesting, if you remember yesterday, when we were reading subsection 2, I said it starts with this word notwithstanding what is given in subsection 1. So by writing this, it is specifically saying that I am overriding subsection 1. I am superior to subsection 1. Interestingly, I did not find that reference here because 7.1c could have started saying that notwithstanding anything contained in clause A. Because actually what 7.1c is doing, it is trying to override clause A. But instead of doing that, it simply says that the activity specified in Schedule 1 made or agreed to be made without a consideration will also be included in supply without saying that it is overriding clause A. Okay, just because I read law more minutely. So I just thought I'll share this very interesting difference. How it will impact that I'll not get into because it is a very different discussion about interpretation of law. But definitely you all should ponder on this, that whether there was a requirement in clause C to write notwithstanding anything contained in clause A, or whether without writing it that still clause C is doable, right? Just a food for thought for interpreting or understanding how law is to be interpreted. Yes.
Yes, sir. Right, sir. Even that when compared to this class number 2, class number 1, double A is more powerful because notwithstanding contain any other law in the force, which means that it is more powerful than this class.
Correct. So that is what I'm saying. No, that they had to write because, as I said, now one AA is introduced very recently after the judgment, and that is why, with all the precaution in mind, the lawmaker decided to give it. Means it is like you are Thanos. If you all watch movies, I watch a lot and I try to learn the subject and remember the subject taking movie examples. So now they have tried to make 71AA Thanos superior to everyone. He can do anything. So he's saying you are overriding all acts, you are overriding all laws. And somebody has put the question in the chat that can you make a law like this which says that you override a judgment also? Now here there is again a very interesting point. Again, it is relating to interpretation of law, that in a democracy, in a democracy, I'm not able to write.
Yes, sir. They can override the judgment also, because that the court and what they are doing, only they are questioning about the law, only they are analyzing about it. The lawmaker, whatever they are making, it is a final.
Yeah. Why I'm not able to write anything? Suddenly this has stuck. 1 second, students. Okay. So there is a very interesting point now relating to this. The question that was put to me was, can you make a law saying that it will supersede everything? So understand, in a democracy, there are different pillars. One is the legislature. One is the executive government. And one is your judiciary. Now the question is, who is superior to whom? The answer is no one is superior to anyone. Constitution is superior to all. Now, Constitution has given everyone their share of roles, responsibilities, and also their share of power. The role of judiciary is to interpret what is made out by the legislature and also to check whether the executive government is using the powers in the correct line with the law and the constitution. If not, it has the power to struck down the wrong actions of the executive. And if any law is made superseding constitutional authority, again, it can make that law redundant or make that clause or point redundant. Otherwise, it can interpret the law. Now, when it is interpreting a law and it has said that, okay, law means A, legislature has always the power to say, yes, law means A, but it also means B, C, D. Legislature has also a power to say, okay, law does not mean say, it will mean something else, B, C, D. So, answering your question, can you make such a clause saying that it will override? The answer is yes. But now an interesting point is, what is still under challenge in clause 71AA, just again, since you have raised that point, that 71A was not there from the start. From the start, the mutuality principle is always there, interpreted in many judgments, specifically of income tax, that mutuality is always there. And the judiciary has interpreted and given the Kolkata Club decision when the law was not having 71AA. So firstly, the judgment of judiciary is going to be upheld. But the challenge is the legislature has not only amended the law. See, it has all the powers to amend the law. It has amended the law retrospectively just to override the effect of the decision. Otherwise, this decision would have applied for the period between 1st July to the judgment date, or not judgment date, sorry, to the date of introduction of 71AA. However, by making a retrospective amendment, it has nullified this also, or tried to nullify this. Now, the battle in our legal field will be that can the legislature do this? Now, the answer is both yes and no. What is the difference? You can make a retrospective amendment, but there are some restrictions. You cannot penalize a person by making a retrospective amendment. You cannot make a person do something by making a retrospective amendment, because when that particular thing was done, the person was not aware. So here, they will not be able to recover tax for the past period, because at that time the law was not there. And by introducing this retrospectively, you cannot penalize me. So that way, the judgment still survives. But yes, answering your question upfront, I believe it has all the powers to make retrospective amendment, and even saying that the earlier judgments may not apply, or my amendment is overriding the judgment. I think that is allowed, and there is nothing derogatory. You cannot say that it is like treating yourself superior. I think it is okay.
Yes,
Sir, but to go out of context, in Vodafone case, they did the same thing. I was reading in like direct tax, this
Yes.
form direct international tax, and they made them. I think they made them to pay. I don't know. I think by the retrospective amendment.
They made them to pay, sir, means they brought a retrospective amendment, but then I think the matter went to the international court, which I think is pending or something. But yes, they brought that retrospective amendment because there was this Vodafone case judgment again, which was favoring the assessee, saying that you will not be liable for capital gain tax in the Vodafone and the, I think, Hutch merger, Hutch and Vodafone merger case, right?
So actually, that is a interest, public interest. The people will hesitate to invest in India when we see the government at any time put the retrospective changes. Then what is the meaning behind in the having a transaction in between?
Correct.
See, also that when you're talking about the constitution is the superior power. However, the legislature can make the changes, amendment in the constitution as well. But how? Yeah.
Hey, so what is your point? I didn't get your point.
See, my point is that even though from the constitution only we are getting the power for anything, whatever we are doing under the India, the constitution is a superior power. But in the constitution also we can change, we can amend by using the legislature.
Constitution can also be changed, but again, you have the famous decision of, again, see, I'm very bad at recalling names, during the Indira Gandhi era, where it has been held that constitution can be changed, but the basic fiber of constitution cannot be amended. So again, a very famous decision versus state of Kerala. This is what I remember. I forgot the name of the petitioner. It is some Swami, and it was against the state of Kerala, and that escalated up to Supreme Court. And if I'm not wrong, it is a 11-member or 13-member bench of Supreme Court, because it was relating to interpretation on constitution. So that is again interesting. Similarly, post-emergency period, we also have another judgment. Then there is a Menka Gandhi judgment. There are multiple judgments on this point that can constitution be amended? The answer is yes, constitution can also be amended. But see, right now our discussion was mainly, can you interpret it, can you amend it retrospectively? We were talking about that 71AA application. And can it be done to override some decision? My answer is yes. But yes, as far as the retrospective application is concerned, what is very important is it cannot be done to penalize someone. So now you cannot make me pay some tax or penalty saying that this applied retrospectively and this will override all the judgments, especially since there is a judgment. I believe that still it is a fightable case for all the periods before the judgment, that I will not pay tax even if I have collected something, right?
Right,
now,
right.
Now we go to what is 7(1)(c) dealing with, that is the transaction which will be deemed to be a supply even though made without consideration, right? Now there is a definition of consideration. I'll request you all to go through that, because if I go to every definition, we will not be able to discuss on the more deeper aspects of these entries, which are very relevant for exams, because you will be getting direct case studies on that. So whatever I am leaving, like some definitions and all, I request you all to please go through them, and you can definitely raise question in any sessions on that. Now, these are those specific activities which are covered in Schedule 1. And as per 7(1)(c), these will also be regarded as supply without fulfilling the consideration requirement. What is this? First is permanent transfer or disposal of a business asset where you had availed ITC at the time of buying such asset? I'll give you most simple example. So for my office, I had purchased various systems, computers, which is required in our CEO office regularly for day-to-day activities. Now, as you know, the technology is fast upgrading, and also there are so many new applications and also so many new requirements in practice. So I changed these systems after 1.5 years or 2 years max. Now, these systems are very much workable. Still, they are all the Microsoft Windows 10 and all, not anything outdated. But for me, I want a latest version because of the nature of my work to make it more faster, effective, and it should support all the latest applications. So I decide to dispose of this. Now, for this, I have two options. One, I sell it as a second to anybody. Whether it will be taxable, answer is yes, because in business, even these ancillary activities would be covered. So even though my business is not selling computers, but it is ancillary to my main business activity. So even this will be regarded as a business and a supply. But the second option is, I remember that my school regularly needs PCs. So when I decided to dispose of, I just went to my school. I checked with my school authorities that are you in need? And they said, yes, Vishal, we are in need. So I said, okay, I have these PCs. And since I have attachment and some, I will say some moral obligation, I want to donate this to you. My school and my teachers are even more happy, saying that fine, that would be a great help for the students. So instead of selling it, I decide to donate. This is what is covered in this the term permanent transfer or disposal. Now, what is important is this PC is my business asset, yes. And when I had purchased this 1.5 years back, whatever GST was leviable on this, I had taken the input tax credit. So what is very important is, since I had taken input tax credit, hence now even if I'm donating it, which is a permanent transfer or disposal, there will be GST implications. Second example in this is, since it is very used out, or I'll say it is as good as in no working condition, I cannot even sell, nobody's ready to buy, because let us say it is a very old model, it is some 6 years old, also it is not in working condition, so nobody's buying, and also it is not any use donating. So I simply discard it. What you say, I scrap it, or in very simple words, I throw it away, because nobody's going to take it even for any money. So instead of blocking my space because I'm replacing it with latest PCs, I am simply discarding it. So not even selling, not even donating. Now, what is your view? If I'm discarding it, let us say virtually, I'm throwing it in the, I'm giving it to that kachra van the next day when they come. Okay, Baba, take this, it is of no use to me. We do this for many furniture items also. When it is totally broken and it is of no use, we simply throw it in the dustbin van. Whether this entry one will apply.
Sir, here, whether you are throwing it off, whether you are donating, whether you are selling, if the ITC is claimed, it is taxable. If ITC is not claimed, then it is not taxable.
ITC is claimed.
Yeah, ITC claims means it is taxable. If the ITC is not claimed, then it is not taxable.
Sir, you are muted, I think.
Sir, when ITC if paid means ITC is utilized means whether you are selling it for donation, whether you are giving it for consideration, whether it is not throwing it off, whatever you are doing, that GST is applicable.
Perfect. So this is what is the point, students, I'm trying to make out, that whether I sell it, there is GST. For that, you don't require 7(1) C and Schedule 1, because when you are selling it, you are getting money. It is supply as per 7(1) A itself. And when you are donating, or when you are even throwing it off, disposing it, discarding it, it is still a supply for the purpose of GST as per 7(1)(c). See, Richa, once you are selling it, whether it is low amount or high amount makes no difference. It will get covered in 7(1)(a), right? So it will get covered there.
Okay, sir.
Sir, we will determine that the fair market value when there is a without consideration. We will find it what is a fair market value. On the fair market value, we will put the GST.
No, sir. Now this is a different point. That is, now we are going into the valuation chapter. Okay, that will be covered separately. But when you are saying this, why you are saying it will be fair market value?
Sir, when we use that ITC, when you are giving for without consideration, see, we need to fix the value right. That value will be fair market value of that particular item what we are transferring without consideration.
But why fair market value? This is my question. Is there a provision in GST to take always compare the sale value with fair market value, and wherever fair market value is higher to take that value?
No, not always, sir. There is a rule. The different rules are there. Yeah, accordingly we have to value it. Yeah.
So that is why I'm saying you cannot say that it will be fair market value.
Yeah. Straight away it is not a fair market value.
Exactly. This is my point. So see, when you are because your exam questions will be exactly like this. What we are discussing is what is, you can believe that maybe if it is getting recorded, maybe somebody may be noting down our discussion, and you can very well get the same thing in your exam as a case study, because we are discussing something very, very specific, very, very relevant. So it is important, students, that you be very specific in what we are discussing. So you cannot upfront tell me that this will be fair market value. Yes, if my transaction is with a related party, if my transaction is with my distinct person, then we may have to check. Correct? Are you getting this?
Yes, sir.
I hope I'm clear.
Yes, sir.
Perfect. So we are having very good in-depth discussion. But just whenever you are putting something, let us now be very specific, because that will lead to how we are looking at the law and how we are, because this is how you'll also approach in exams. So let us now be very, very precise and specific. So very well brought out by everyone that even if it is discarded, it will be covered under 7(1)(c). And also for sale, we have discussed one more point, that is about if it is sold for a very low price, then what will happen? The answer is, for that we'll go to the valuation. In some cases, it will be valued as per your sale price, and in some cases, it may be valued as per the valuation rule. Now, just a point here, along with this, whenever you are selling, disposing of, there is a provision for proportionate ITC reversal under section 18. So just since we are discussing this in so detail, let me add to this that whenever you are selling it, you have to also apply the rule or provision of section 18, where it is asking you to also do proportionate ITC reversal. So what effectively you will be paying is higher of these two, right? Now, adding one more example to this is motor car. So one was computer or furniture item, the other is motor car. So I have bought a motor car for the purpose of my business. Now we all know there is section 17(5) clause A, which says that motor car which will be used in business, but not for the purpose of providing any outward service like transportation or like training or driving motor car, etc. When it is used in business but not for providing outward service, then this motor car is not eligible for ITC. Correct? I am sure everybody recalls this. Now
Yes, it is a block credit.
It is a block credit. Perfect. Now let us say same thing happens with this motor car. First option, I sell it for some price to anybody now. It may be someone related to me. It may be some second-hand car dealer. I sell it. Second, again, I donate it to my school. And third, now the car is so old, so outdated that it is useless, worthless. It is regularly having lot of problems. Or let us say during this heavy rain season, because of floods, the water entered the engine and it has completely locked my car. It is now of no use virtually. So I simply throw it away. Now my question is, what would be the GST implication? I am selling it, I am donating it, I am just throwing it away.
For selling, that 71A will apply normal tax, I think, on the sale price. Scrapping, since it is ITC not availed, I think no treatment should be done, as the same case for donation.
Okay. So one view, for sale, 718 triggers in, so I have to pay GST. For other two cases, 71A not applicable because it is without consideration, and 71C clause 1 also not applicable because I did not avail any ITC. Right? Everyone agrees?
Yes, sir.
Right now?
That is our view. You can.
Obviously, sir, I'm taking everybody's view, sir. Sir, we are here like we are in group discussion. There is no class going on. It is a group discussion. So everybody has rights to put in your view, and that is how, see, in discussion only it will be retained more. If I'm only speaking and you're listening, you will forget it. So you all are correct. If you are selling 71A, what price? The price at which you have sold. And if it is to some related person or all, then maybe we have to check the valuation rules. Otherwise, it is the sale price. Whether it is low, high makes no difference. But for related person sale, etc., we have to see the valuation rule. If it is donated or if it is discarded, 71C will not apply, means this entry will not apply. But if it is donated, 712, sorry, Schedule 1, Entry 2 may apply, but Entry 1 will definitely not apply. So it is not a supply in case of donation and scrap so far as Entry 1 of Schedule 1 is concerned. But in case of donation, if I am not donating it to school, let us say I am donating it to my employee. If I am a partnership firm, I am donating it to my partner. Donating means giving away, like this only. That is what is as good as donation. Let us call it as gift. Maybe donation, it may not sound proper. If I am giving it to my employee, my partner, or any of my relative, like my son, my wife, my brother, then interestingly, 71C is applicable not from the point of view of Entry 1, but yes, from point of view of Entry 2, it may apply. So see how answer changes. So whenever we are seeing for consideration, no problem, 71A comes in. Only then what has to be checked is whether full value that you are showing or some other value that we'll study in detail in valuation chapter, and mainly some other value may trigger it whenever it is a transaction with related person, etc. But when it is no consideration and it is completely thrown off, then only Schedule 1, Entry 1 may apply. If ITC was taken, if ITC was not taken, nothing will apply. But if it is given as donation or gift, it may fall in Entry 1 also. If not, it may still fall in Entry 2 if you are giving it to your related person or to your distinct person as gift. But yes, definitely Entry 1 will not hit. Is this fine?
Yes, sir.
See how interestingly law is woven.
Yes, sir. But
I'm
you are
answering,
taking
right?
you are taking it as interesting. You are making it as interestingly, sir. Actually, law is actually is written like that only. But how it is interpreted, how the people are explaining is more better. The knowledge and experience.
because I am three at the same time. I'm also a student, I'm also a teacher, and also I'm a legal, you can say, counsel or a litigator. So since I have a mix of three, I have to use all the techniques or skills or whatever is my learnings and experience of all three. And I'm trying to put it here so that you carry it not as a law, you carry it as a, like how is our day-to-day activity. We need not remember everything. We are doing it by instinct. I believe the subject should be in you by an instinct. So how by instinct we do so many things? Let us try to make the subject our instinct. Fine. Okay. Now, so connecting one with two now. So when we talk about two, now one was only dealing with business assets. So by default, it covered only goods, though not mentioned, but business assets can only be goods. Now, interestingly, entry 2 in schedule 1 will cover both either supply of goods or supply of service when it is made to your related person or when it is made to your distinct person. Then it would be covered in schedule 1 entry 2. The only requirement is it should be in the course of business. I assume that it will happen in course of business because like in all these examples, all these assets and all are part of my business only. Now, what is this entry basically dealing with? When I am giving anything to either my related persons or to my distinct persons, the law says whether you do it for consideration, still it is a supply. In that case, it will be a supply under 7(1)(a), but definitely valuation rule will kick in. So you'll have to see the valuation as per valuation rule, but 7(1)(a) will make it a supply. But when you're doing it without consideration, still 7(1)(c) will make it a supply. Only condition is it should be in the course or furtherance of business, which I believe would be satisfied as a generic assumption. Now, I have a very interesting question in chat. Sir, when you already have 7(1)(a), what was the need for bringing 7(1)? This, I believe you are asking about Ayush, this second entry, though I think you have wrongly written 7(1)(c)(2). You mean entry 2 of schedule 1. His question is, sir, if ITC is not availed, then why are you bringing in taxability through entry 2? So his question is very valid. Let us take the same example of motor car. He has only a problem where motor car is given to a related person, because I just explained here that if you are giving motor car to a related person even as gift or donation, then it would be triggering supply because of this entry 2 in schedule 1. Now, Ayush has a very relevant question. Sir, but in the first place, you did not give me any credit of this motor car. But now you are making me pay GST. So in that case, Ayush, my counter argument to you is, had you sold this car, still I was making you pay GST. So if you are not selling, you are gifting it. So simply because you did not get ITC, I don't think that can be a reason or argument for not paying tax at the time of supply. See, I'm just trying to correct your thought process. So we cannot argue that since I did not get ITC, at the time of output, I will not pay tax, because had you sold the car, you are ready to pay tax. Now, the same car you are gifting to your related person. I don't think there is any bar that the law will say, okay, since I did not give you ITC in the first place, don't pay tax. It will be taxable because of this entry 2. That is, it will fall in 7(1)(c), read with entry 2. Now, the interesting question is, what value? Again, so when you see the valuation, Ayush, I think you will be satisfied that over valuation, they have given you relief. So in valuation, there is such provision that it is not necessary that you will pay tax only on the fair market value. So when you are giving to your related person or distinct person, and the related person or distinct person is eligible to get ITC, even ₹1 will be accepted. But if it is not eligible to get ITC, then there will be a lot of challenge. Yes, Neha, beta.
Sir, there is a confusion.
Please,
When when we have a motor car, okay, and we does not get input over that, but we capitalized it, on that we get depreciation.
Correct. So you will capitalize because you're not getting ITC. So the law allows you to get depreciation. Go ahead, Vedant.
Depreciation, we are getting depreciation every year. Suppose we are using it for 2 or 3 years, on the ITC also we get the depreciation. After
Correct.
that we either we sell it or we donate it. Already we have taken some part.
Okay. So I think
Then
you are trying to justify Ayush question that you have got the benefit of ITC in some manner.
yes sir, yes sir.
Great. I agreed with that. Taken. Your point taken. So yes, as Neha has said, Ayush, that you can look at it from different angle, that even though I did not give you ITC, but you got indirectly the benefit of ITC in the form of depreciation. So the point is that when you are supplying, now interestingly, if you see, this 712 has some inbuilt restrictions. Like when you see I'm also using the wrong term, 712, not 712, entry 2. If you look at entry 1 of this schedule, there was no term of supply used. There was no requirement of in the course or furtherance of business. So entry 1 was more broader. But in entry 2, they have restricted the application of entry 2 by incorporating the words goods, service, supply, and also the requirement of furtherance. So to some extent, they have tried to build in one very important point, that it has to be supply fully. In short, it has to be supply fully. The only thing what is missing, which we are going to still accept, is that it is without consideration. So what they have tried to do is in para 2, in order to tax this, they have said that only if consideration is missing, but all elements of supply are present and the transaction is between related persons or distinct persons, we will make it taxable. Now, for me, what is more important than goods is the transaction of service. Because see, goods is very simple because you can see. Like in motor car, we will see that, okay, car is given to the partner who's a related person. Car is given to the employee who's a related person. The challenge is service. What is this challenge? This same motor car, I'm not giving away, I'm not gifting or donating to you, but I'm allowing the partner to use this motor car for his or her personal purposes. This is very common. So if there is any asset of a firm, maybe a motor car, maybe for that matter, laptop, mobile phone. Many times you purchase these assets in the name of your firm, in the name of the company, but it is allowed to be used by the partners, by the owners, by the directors who are related persons. Now, interestingly, my experience and whatever I'm seeing in the GST law, I have found that 99% of the businesses are not following this entry 2 when it comes to supply of service. What is this service? You are allowing your related persons, in fact, in some cases, your distinct persons, to use your business goods or assets free of cost. Now, the point is, you are allowing them to use free of cost, maybe unknowingly, because it is like very obvious. Okay, if you are a partner, you use the car, but the car should be used only for business travels. But when it is a car, it would be definitely used for personal travels. Now I'll relate it with something very important. When you look at the PGBP head, when the same firm, when the same company is filing its income tax returns, under the PGBP head, you have specific provision, section 38, which says that where any of the building, the motor car, or any of the asset of the business is used partly for personal use, we will disallow proportionately that expense. Now, it is a very common feature that in your income tax assessment, your mobile bills, or even for that matter, your laptop depreciation, and these common assets depreciation like motor car, the maintenance bill of laptop and motor car, the assessing officer disallows it proportionately, at times 50-50, 60-40, something randomly, on the pretext that it is also used for personal use, and we agree if you all have handled income tax of any of your clients, and if you have seen this, you will find that during assessment, these are the common disallowances, these are the common additions made by the tax authorities, and we also do not argue because we know it has happened. Now, interestingly, if you have accepted that in income tax, please understand, as a GST officer, I can simply pick up your income tax returns and come back to you and say that, boss, this entry 2, you have not paid tax. Because when you allowed your partner, your owner, your director to use the asset for their personal use, which you have accepted as a disallowance because it is personal use under income tax law, why not I should treat it as supply of service to your related person and ask you to pay tax? So that is going to be an interesting proposition. Fine. Yes, Swaminathan.
Yes, sir. Sir, I thought of my checking with my understanding.
Please.
See, when the car is purchased for 10 lakh, the GST is 18%. The GST is plaqued, means that we can claim the depreciation for the including GST.
Correct.
If the car is used for the passenger or conveyance purpose, then the ITC can be claimed. In that case, only the cost of car only can be claimed for depreciation. So in that case, it's 10 lakhs. This is what, right, sir?
Correct. So where now that you will get more details when we read the blocking part in 17.5c, but you're right. So where the car is used for making some outward supply, like you are in the business of selling car, you are in the business of transportation, then the car ITC is available, then you will take depreciation only of the cost. But
Yes,
where
sir.
the car is purchased for the day-to-day business use, like your directors are traveling for some meetings, your partners, owners are traveling. For that matter, when we also buy any of these assets, including laptops, cars, etc., we take it in our firm's name so that we get ITC. But for car, we will not get ITC because the car is not giving any outward supply. Correct?
Yeah, right, sir. Since we discussed, I thought of checking with this.
Definitely. You're right. Your understanding is correct. Now, in the same entry 2, there is one interesting, you can say, exemption. Now, we said that when you give anything free to your related person, it will be treated as a supply under entry 2, even without consideration. Now, this is a specific case of employer giving gift to employee. Now, if employer is giving gift to employee and the value of this gift in one financial year is not exceeding 50,000 rupees. So the value of gift, now this is again aggregate of all gifts given by the employer to that one employee. If the aggregate of the value of gifts given by the employer to that one employee during one financial year is below 50,000, then it will not be falling in this entry 2. It means we will give you exemption from entry 2. It will not be regarded as supply. However, if this value of gift exceeds 50,000 in the year, then entry 2 will trigger. Even though you are related parties, it will be liable to GST because exemption is only up to 50,000. If it exceeds 50,000, it will be taxable. And same like under income tax, let us say the value of gift is 60. If you remember, in income tax, we don't tax 60 minus 50, 10,000. We tax entire 60,000. Same logic should apply over here. 50,000 is not the straightforward exemption. It is just a criteria to decide when it is taxable, when not. So if you exceed 50, like in case if you have given gift aggregating rupees 60,000 to an employee, entire 60,000 will be made taxable here also. Other entries in this schedule are simple. So entry 3 is wherever there is transaction between principal and agent. So principal sending goods to the agent, like we have the consignment agent, or the agent sending goods to the principal. In either case, it will be regarded as supply. Now, relating to this, there is an important circular that we'll cover and we'll discuss in detail. What is more important for me is this entry 4. That is for import of service. Now, we all know what is import of service. Now, for import of service, there are different possibilities. What are the different possibilities? So you have imported service. So there is a transaction of import. So first you satisfy the first requirement of supply. So once there is import of service, there is a transaction. Second requirement, it should be goods or service, it is service. So all these are satisfied. We need not check those things. Person is also there. So that is also not a problem. So because you are importing from a person sitting outside. Now, if other test like it is imported for the purpose of business and there is a consideration, means it is not free, then it will be a supply under 7(1)(a), right? If it is imported for personal use, that is not for business, but there is a consideration, it will be a supply under 7(1)(b), which I had left out when we were discussing 7(1). And when it is imported for business purpose, but consideration is not there, that is, it is imported free, then this entry will trigger in. Now, this entry says that when you are importing it free, that is without consideration, first is it should be for business, it should not be personal. If it is personal, then consideration should be present, then only it will be a supply under 7(1)(b). But if it is for no consideration, then it should not be for personal use, it should be for business use. And most important, it should be coming from your related person or from your other establishment outside India. So it is received from your distinct person, that is your establishment, which is outside India, or it should be given by your related person who is outside India. Then it will be a supply under 7(1)(c), read with Schedule 1, Entry 4. But if you are importing this altogether from an unrelated person who is not related to you, then it will not be a supply at all. So please understand, please mark this. And when two ingredients are missing, so it is neither for business, that it is personal use, and also it is free, then it will be a no supply because it is not fitting in 7(1)(a), B, C either. So import of service can be supply under all the three clauses. If all conditions are satisfied, now see, other conditions are satisfied here. So there is a transaction, it is of goods or service, and there is a person. All first three are basic conditions in import, it is already satisfied. The other two condition, business consideration satisfied, it is supply as per 7(1). Business not satisfied, but consideration is there, it is still a supply under 7(1)(b). Where consideration is not satisfied, but business is there, it will be a supply provided it should be from your establishment outside India or from your related person under 7(1)(c). And where it is from an unrelated person, it will not be a supply at all. And where it is personal, that is business is not satisfied, when consideration is also not there, then it will be outside all clauses, it will be no supply at all. Yes, Ayush. A related person will cover a holding company, subsidiary company, sister concerns. Great. So students, this is the whole Schedule 1 transactions, right? Now we'll take a 15 minutes break because I've been speaking continuously for around now more than quarter to 2 hours. So I'll try to be back in 10 to 12 minutes, but maximum 15 minutes, that is 8:05 sharp, we will start, right? So we'll go to the last part, that is the classification and then composite supply and mixed supply. Fine?
Okay, sir. Thank you.
Sorry, in the meantime, you all can just go through the circulars relating to this part. So that if there is any question in that, just go through the circulars relating to this part in the meantime. So that if there is any clarity you want, we'll discuss that. Fine. Now, some important clarifications relating to Schedule 1. This one, you should make a note. Now, many times, when a large-scale company gives contract to a small industry for making some components or parts, in order to ensure that the component parts are as per the required standards and specifications, the raw materials, at times the molds, the dies, these may be provided by the original manufacturers to the smaller companies who are going to be their component manufacturers. Now, the question is, when these original manufacturers or the large industries are sending any of these items free of cost, which may be raw material or molds or dies, to these small component manufacturers so that they can use those molds dies in making the final product and give it to the original manufacturer, whether this will constitute a supply? Answer is no, for the simple reason that these companies are not related, neither it is the same company's another branch which is called as distinct person. Hence, it will not fall in any of the criteria. 718 does not fall because it is without consideration. 71C it does not fall because it is not fitting in any of the criterions envisaged in Schedule 1. Now, this was the point we were discussing in the previous class, that where an employer gives some facilities or benefits to its employees, which is referred to as perquisites. Now, in the previous class, we were discussing Schedule 3. Schedule 3 was dealing with employee giving services to employer being outside GST. But where employer is giving any facility like stay facility or any such facility which may be called as a service, because if I am allowing you to stay in my flat, it is a service of renting, but I am allowing it to you as a perquisite, whether it would be leviable to tax. So what is the point? Perquisites provided by the employer to the employee as per the contractual agreement which is entered into between the employer and the employee will not fit in this Schedule 1 entry 2. This is what is the main important point, because when employer is giving free of cost to employee, they both are related persons. The question is, will it fit in this Schedule 1 entry which we are discussing now? Answer is no, because it will be considered as an indirect way of making payment of your salary. So it will not be subjected to GST. This has been clarified by this circular. So that will be the base. Then in this principal agent point, this is the deciding factor. Now, we all have studied the subject of consignment in our 11th standard accounts and maybe later at some other higher levels. Now, what we see that I am the main businessman. So let us call myself as principal. I am from Mumbai. Now, I appoint you as my consignment agent, and you are sitting in the city of, let us say, Nagpur. Now, what I do is I send goods to you. Let us say I am dealing in some high-end clothing and accessories. I'm a dealer of one of the clothing brands, and I have appointed you as my consignment agent so that you can sell the same thing from there on my behalf. Now, what is the point where we will fit in Schedule 1 and we will not fit in Schedule 1? Whether the invoice for further supply, that is this invoice, is issued by the agent or not. In other words, the crucial point is whether or not the agent has the authority to pass or receive the title in goods on behalf of the principal. Now, what it is, we'll understand. Where invoice for further supply is being issued by the agent in his name, right? Or is it in the name of the principal? This is the differentiating factor. So where this agent is acting as a independent person. So I'm sending goods to this agent. An agent will be further selling goods to the final customer, but he is independent. Independent means I will be raising invoice in my name on the agent, and when the agent is selling, agent will be selling the goods in his name. Then this transaction will be falling in schedule 1. My invoice to agent will be leviable to GST. But if I am sending goods to the agent, an agent, when it is selling the goods, it will be raising invoice in my name only. Then the transaction between me and agent will not be regarded as a deemed supply under schedule 1. So the deciding factor is that when the agent will be selling the goods, this is what they have called further supply. So when the agent would be selling the goods finally to the end customer, at that time, the invoice will be in agent's name. If yes, it is schedule 1 transaction para 3, deemed supply. But if the agent will be simply making the invoice in the name of the principal, so you can understand graphically. So in the eyes of law, the goods are directly going from principal to customer, and then the agent will be only getting the commission. So he'll be acting just like a mediator person to connect principal and the customer. So the supply is happening only between principal and customer. But where I am sending goods to agent and agent will be further selling in his own name. So there are two distinct transactions between me and agent, and another one is between agent and the final customer. Then this has to be taxed because this is also an independent or distinct transaction. So this will be a regular supply under 7(1)(a), and this will be the deemed supply under schedule 1. So this is, students, what is the deciding factor, also clarified by this circular, right? Now in this, they have further clarified whether the agent is del creditor agent. So we know that there are different types of agents. See, that does not alters. What will be the deciding factor is invoice is in whose name. So if invoice is in the agent's name, schedule 1 triggers. If invoice is not in the agent's name, it is directly in the principal's name, schedule 1 will not trigger. So whether you are del creditor agent, whether you are normal agent, all these things do not affect, right? And then comes the importation of service. This is also what similar graph I had given, but with different type of presentation. Same thing they have given here in their way of presentation. Then comes another interesting point about sales promotion schemes. Now, right now we have this season, the monsoon season. Very soon we'll have the 15th August sale also coming up. So in all these cases, there are different schemes. Now there is one very common scheme of buy one, get one free. Now the question was, when it is buy one, this is a supply, no problem. So let us say we take an example. So with a soap, you are given a toothbrush which is free. So soap is shown as a sale, so we have no challenge. It is a supply under 7(1)(a). But the toothbrush which is given free, will it be covered in schedule 1, entry 1? Because generally it is to customer who are not related persons. So will it be covered in schedule 1, entry 1? The answer is no. Rather, they are saying that we will not consider this as an independent supply. We will consider that you have sold two things. One is the soap article and the other is toothbrush. And we will consider that you have sold both things as one composite or mixed supply, which we are going to discuss further. Means this will not be considered as free. It will not be considered as a separate schedule 1 supply. That will not happen. We will consider that this is given as a package, and then whatever price you have charged, you are saying this is the price of soap, we will consider that it is the price of the package, and we will apply the principles of section 8. If it is composite, we will take the rate of the principal supply. If it is not composite, it is mixed, we will take the rate of the highest item. So this is what is the treatment given whenever there is a sales promotion scheme. Similarly, where free samples or gifts are given. Now, what is this free samples or gifts? So many times you find that outside some mall or outside some public place, people are standing giving one of their products as free sample so that you can use it, you can taste it, and if you like it, then you can go and buy the actual product. So this is what is free sample. So the question is whether free sample is a supply. They are saying it is not a supply under GST except wherein it falls in ambit 1 of schedule 1. Now what clarification they have given? We have to read 31 footnote. It says that ITC on such inputs to the extent they are used in relation to this free or gifts shall be available to the supplier only when the activity of distribution is falling within the scope of supply. Means what? If this is treated as a deemed supply under schedule 1, you get ITC. If it is not deemed supply under schedule 1, then here it is not a supply. Under the chapter of ITC, you will study that section 17(5)(h) requires you to reverse the ITC that you have taken on such gifts or free sample. So in short, whenever you are giving any product free, one of the things will happen. Either this will become a deemed supply under schedule 1, so you end up paying GST on the sale. If not, then it will still be taxable differently. How? Whatever ITC you have taken, you have to reverse it back. So this will be the treatment whenever it is sample or gift. Buy one, get one, we just discussed about. It will be treated as composite or mixed supply. It will not fall in schedule 1. Yes, Neha.
Sir, my question is that I was working somewhere, and at that place a box of 100 pens is coming, inside which 5 pieces are free of cost. Okay. The manufacturer, some manufacturer raised the bill saying that costing of 100 pieces, let's say ₹1 per each, and the remaining 5 pieces free of cost, they enter the quantity. And some vendors, they did not mention on the invoice. They just raise the invoice of 100 pieces and they does not mention the free quantity. Then
Question.
सर, तो इसके अंदर जो दोनों ही केसेस में जीएसटी जो फ्री क्वांटिटी होती है उसके ऊपर उसकी कॉस्ट उसके अंदर इंक्लूड तो होती है, बट ऑब्वियस, लेकिन उसके बाद जीएसटी कैसे मतलब लेवी होगा या कैसे उसको हम पता करेंगे?
Answer is this. So it is like buying 95 pence and getting 5 pence free. So they say that we will consider the price of this 95 pence as the value of 100 pence. In short, we will consider nothing as free. And as you rightly said, see, this is indirect way of marketing. So, or it is, you can say, indirect way of giving discount. I can say that I have given discount on 100 pence, or I can say I have given 5 pence free. So both means one and the same thing. And that is why I really appreciate this circular, which we studied above also. This is really a path-breaking circular because it has clarified majority of the problems. Now, fortunately, in your case of pen, there will be no challenge of this composite and mix also because all pens are same. So in short, it will be like this. You will be paying tax on the value of 95 pence, treating it as value of 100 pence. This is what is the answer in your case. And where two separate things are given, like the previous example of soap and toothbrush, they are again saying nothing is free. As you rightly mentioned, the price is included in the value. So we will treat it as a package of 2 items given together for one single price. And then you'll go to section 8, determining whether it is composite or mix and tax it accordingly. But the point is, in any case, it will not be treated as a free supply under schedule 1. Right?
Sir, yes, sir. Sir, when we sell those goods, whether we should also raise the invoice including this quantity, or we can...
Okay. So for that, I'll tell you what is the practice, Neha. More appropriate practice is when you are raising the invoice, right? You should raise the invoice like this. Pence, whatever is the HSN, you'll write quantity 100, multiply by ₹100, minus discount 5%, 5 rupees, so 95. So what will happen? Your quantity, because tomorrow your stock has to tally. So actually you have given 100 pieces. So the most appropriate way, considering this circular also, which is now suggested and many industries are following, is you raise invoice for 100 pence with value of 100 first, And then whatever is the free pen, the value of that free pen, let us say here it is 5. So I'll say 5% is my discount. Even if you don't write percentage, it is fine. Whatever is the value of free items in that, you subtract it, calling it as discount. So your final taxable amount, bill amount is of 95, which is the case actually.
Okay. Okay, sir. Thank you.
Perfect. Fine, everyone?
Yes, sir. Otherwise, the quantity mismatch will happen.
Exactly. And then other challenges will come at the time of stock taking and all. So to avoid that, this is the best industry practice that is suggested also and that is followed also. Now we come to the next part, which you can say is the last part in supply. That is our step 3. Step 3 is classification. What is classification? So once you have concluded that yes, my transaction is fitting in 7(1) A, B, C, etc., and it is becoming a supply, the entire GST law is not taxing supply. I repeat, entire GST law is not taxing supply. It is taxing supply of goods or it is taxing supply of service. So simply saying your transaction is supply will not suffice, because everything in GST, be it rate of tax, be it exemption, be it RCM, be it valuation, time of supply, place of supply, every chapter which you will study has bifurcated it, whether it is goods, whether it is service. So we also now try to understand this bifurcation. This bifurcation has been brought in through 2 sections. One is 7(1) A and the other is 7(3). Now 7(3), what it says, that again the government on recommendation of council will notify which transaction should be called as supply of goods, which transaction should be called as supply of service. So 7(3) has sort of given power to the government. Through notification, they can treat some transaction as supply of goods, treat some transaction as supply of service, which is okay. Main thing for us is section 7(1)A, which says that actual classification is given in schedule 2. Now, just to give you a small history, earlier, as you can see, 1A means it was not there originally. So originally, this was part of section 7(1) in the form of clause D. So what you are studying in 7(1)A was part of clause D, saying that the classification would be done by schedule 2. So for identifying whether your supply is of goods or it is supply of service, which classification your transaction fits in, you have to go to schedule 2. Now this created a problem because 7(1) was actually defining supply, whereas this is for after you have concluded it is supply, you have to now just check whether it is goods or service supply. So it was for classification. So there was a conflict, internal conflict, and I'll say internal error in the drafting. So very correctly, the legislature, on identifying this error through various representations and various questions raised, they deleted this so that it is now no more part of the definition of supply. So definition is independent. It means you first test whether it is a supply or not. Once you have concluded it is a supply, then you come independently to this section 7(1)A to now classify. Okay, now it is a supply. But for all GST treatment, we don't need supply. We need supply of goods or service. So how to decide whether the supply is of goods or whether the supply is of service? So 7(1)A says, okay, refer schedule 2. Now what schedule 2 has done, it has made some classification of transactions into different categories. And for each category, it has listed out whether it will be supply of goods or supply of service. Now let me give you my bifurcation or categorization. So firstly, check whether your transaction is of immovable property. Now what can be the transaction of immovable property? It can be sale of land or it can be sale of completed building. Then it can be sale of under construction building. Then it can be renting, leasing, hiring, easement, and all those things, either of land or building. Now, what does schedule 2 says? This anyways is already out. In our first step itself, we said that sale of land and completed building is out. what is left except these two transactions is, one is sale of under construction building, and then all these activities relating to land or building, which can be renting, leasing, hiring, easement, and all types of rights. They say that since land building cannot be goods, as we discussed the definition of goods, it will cover only movable. Hence, any transaction in land or building cannot be supply of goods. There is only one scope, that all these transactions will be supply of service. So first part, which you will find in schedule 2, this you will find in different entries. I've tried to consolidate and make it one for easy remembrance and easy application, that I classify some entries of schedule 2 which are dealing with immovable property into one category, that if it is sale of land, sale of building, it is already outside GST, so no need of classification. And for remaining transactions, it will be only one, it is supply of service. Fine. Then we come to movable, you can say assets, or what will be movable is by default goods. Now, when you're talking about transactions of movable items, there could be different possibilities. One is you are transferring the entire rights in these goods. Either it is done immediately or it is done at a later point of time. In both cases, it will be supply of goods, but where you're not transferring the outright rights in the goods. So rights, I will substitute the word with title. So when title is not transferred, you only allow the use, the display, the handling of goods without giving the outright title, it will be supply of service. Now let us understand this bifurcation. Again, this is coming out from 2-3 separate entries. I have merged it, made it one category. What is this? Let us take a simplest example of goods of motor car. Simplest example. So motor car, movable item, so it is goods. Now, where I give you the complete title in the motor car, that is, it is in my name, the registration is in my name, now I register it in your name. So I have given you the entire rights, or let us use a proper word, I have given you the title in this. So whenever I am giving you the title, now it can be given by way of sale, barter, whatever is the nature of transaction, that is not important. But what is important is I have given away the title. When I am giving you the title in these movable items, that is goods, the transaction will be treated as supply of goods. But the same motor car, I'm not transferring in your name, but I'm allowing you to use. Okay, so you can take it for 2 days. Or many times people just take it to keep it in front of their house. So let us say you have some important meeting. Now I cannot allow you to use my car, but I am allowing you, okay, you can just, I will park my vehicle in front of your house. So if anybody is coming, let us say some people are coming for your marriage proposal and you just want to show up in front of them, or you are having some important business clients coming to and you just want to show up. So what I do is I will just allow you to display my goods. So when I am doing any such thing, that is, I am allowing you to use, display, carry, handle my goods, but not giving you the outright title, that will be supply of service. Similarly, when we are talking about any assets, capital assets, though according to me it is similar to movable assets, but they have given it separately, same two classification continue. So where it is outright transfer of the capital asset, it will be supply of goods. But when I'm allowing you to use the asset for your personal use or temporary period, it will be supply of service. Same analogy they have given for intangibles. Now, intangibles can be copyrights, can be trademarks, can be some softwares, Okay, software I'll take separately because again, it is a different category. So all intangibles, which we know, patent, copyrights, trademarks, all these, right? The answer is same like goods. So where I'm giving you title, it is supply of goods. Where I'm only allowing you to use, it is supply of service. Then comes within intangibles, software. Now, software, there are different possibilities. Firstly, it is a standardized software where again I have given you the titles, all the codes. That is, you are the complete owner. I am giving you outright title. Then it is supply of goods. But where it is a customized software, even though I have made it for you, so you have the title, you have the codes, but the customized software, I have made it for you. I hope you understand the difference. So here I am not simply giving you the software like a standardized product off the shelf. I am making the software for you. Though you have the complete title, though the codes are with you, this is supply of service. Similarly, for any standardized software, where I am not giving you the complete title, but I am giving you the license, that will be again supply of service. So giving you examples, Tally software. You buy the entire title to that Tally software, it is supply of goods. But you make your ERP solutions for your company, you get it made for hundreds of crore, it will be supply of service. And where you buy something like Quick Heal, which is again a standardized software, you don't buy it outright. You get the license to use it. Like lakhs of people who are using it, I give you license, which may be for a year, 2 year, 3 year. Again, it is supply of service. This is clear, students. These are the different types of transactions for which they have given out, whether it will be supply of goods, whether it will be supply of service. Anybody, any questions?
No, sir, it's okay.
It is fine with all?
Sir,
This part is slightly... Please.
Sir, the tally is a supply of goods. Then in case of that quick heal, that is also we are getting the license only. Is that a supply of goods?
No, sir. I've already given an example. Tally is supply of service. Now see what is the difference. Sorry, Tally is supply of goods and Quick Heal is supply of service. I'll tell you what is the difference. See, when you take a Tally software, when you buy it, let us say, even though it is an old version Tally, let us say Tally some 9 point something, though today you have Tally 12 also, let us say it is Tally 9, you bought some 3 years back. Are you still not able to use that Tally? Yes, sir.
Still we can use it, sir.
It is lifelong with you, sir. I have given you the title of that particular means it is, you can say it is a type of license, but it is a permanent license. It is not a license which will exhaust. But when you talk about Quick Heal or any such antivirus firewalls, many times means practically what happens is they give you that for 1 month, 1 year, 2 years, 3 years. So it is like a subscription. The moment the subscription expires, it goes off. You cannot use it, right? No?
Okay. Yes, sir. Got it, sir.
That is the difference between software which is Tally also and which is your this also. Yeah, that's why I'm saying, Ayush, I agree that Tally does not share codes. That is why I've written both. It is not necessary that always codes should be shared. I've written both. So it may be codes or it may be simply giving you the outright title. You can use it always lifelong. Then supply of goods. So codes is one of the things why I highlighted, because generally this happens in case of softwares. So I'm not saying that the codes is the only criterion. It is one of the criterion, right?
Right, sir.
You just-
Whether the title is transferred fully or not, that is a matter.
Obviously. Or I'll put it other way. Can you use it lifelong? Let us take it in simple words because we need to have a practical application of it. If you can use it lifelong, it is supply of goods. If
Yes,
after
sir.
some period it will automatically close down, it is supply of service.
Okay, right, sir.
True? Simple to
True.
understand and practically apply.
Yes, sir. It's very simple, sir. When the title is fully transferred, it's our ability to use and control that asset. Then it is our.
Correct. So see, now you go to various entries. All these are the entries which I have explained in different manner. Now this is that point in goods where the title will transfer at a future date. What is the case? It is a simple case of goods which are bought under the installment scheme or hire purchase scheme. But effectively, even though the title will transfer at a future date, but you agree today itself that if you complete the installment, the title will transfer. So effectively, the nature is supply of goods only, right? But in all other cases, it is supply of service. Then when it comes to land building, where you have any such transaction of lease, tenancy, it is supply of service. When this one is a specific point, I did not cover it in the above list because above list I covered those pointers which are having multiple entries. Now this is one specific entry, what we call as job work. So when you are getting somebody else's goods on which you have to do some treatment, some processing, which is what is called as job work in industry, and return back the goods, what you are doing is supply of service. Then transfer of business asset, I explained, where you are giving outright title is transferred of the business asset, it is supply of goods, but where it is just given to use, like what I was giving example in schedule 1, when a firm's or a company's assets are given for private use to its directors or its owners or its employees, it will be supply of service. Now, exception in this is when you are transferring the business as a whole, which is called as a going concern. Why it is an exception? Because you'll see that it is considered as an exempt supply. So if I'm transferring my business as one, means I'm not bifurcating into land, building, plant, machinery. In fact, I'm giving assets, liabilities, everything. So in short, let us say I was running a hotel till date. Now I do not want to run, but the hotel is continuing, the business is flourishing, and you want to take up running the hotel. What simply you will do is you will pay me the net worth of the hotel, and from tomorrow you will start continuing to run. Means the hotel is continuing, only the owner has changed. This is the example of transfer of business as a going concern, which is exempt, and hence they are saying it is an exception to this. That is, they are not covering it over here, but actually technically it is supply of service, and that is why they have given exception, means they don't want to consider it as supply of goods, or it is supply of service. But you should also know that transfer of business as a going concern has been made an exempt supply. Renting is supply of service. Then this point that we were talking since start, that whenever you are selling under construction building, it will be considered as supply of service. Swaminathan, can you please read this entry for me? I want to do some discussion.
Construction of complex building, civil structure, etc. Construction of a complex building, civil structure, or a part thereof, including a complex or building intended for sale, to be buyer wholly or partially, except where entire. Sir, would you please come down?
I've already scrolled.
Okay. Buyer wholly or partly, except where the entire consideration has been received after issuance of a completion certificate where required by the competent authority, or after its first occupation, whichever is earlier.
Correct. Now this is what is the criterion which we call as sale of under construction building. So for simplicity, we call it as sale of under construction building. So if it is after completion of construction, it is no supply as per schedule 3. And when it is under construction, it is supply, and it is supply of service. Now, this what we call as under construction is what is put in some technical language, which I want you all to just pay attention to. So what is a transaction? The builder is giving you this. What he is doing for you, he is doing construction for you. It may be a complex, a building, a civil structure, or even some part of it. So not necessarily the entire building will be given to you. It may be one small part of it, like one unit, one flat, one shop. And this may include a complex or a building intended for sale to a buyer. Very important part is this, because this is what is outside GST, except where the entire consideration is received after issuance of the completion certificate. So if you book the flat after the completion is given to the flat, that is the building or the complex, then it will be a no supply transaction. But even if you give a very small portion as advance before the CC had come, it will be considered as supply and it will be taxable as supply of service. Then they have defined all these terms, competent authority, etc. Then relating to intangibles, what is the rule? Where you are temporarily giving, not outrightly transferring the title, but temporarily giving the rights to use the intellectual property like patent, copyright, trademark, it is supply of service. Similarly, when it comes to software, when you are doing development, designing, programming, adaptation, etc., etc., it will be again supply of service. Now, when you say development, designing, programming, it is what is the customized software, and upgradation and enhancement can be of any software. So when you are giving only upgradation service or enhancement or implementation service, it may be of standardized software or of customized software, both will be supply of service. Now, this is that point which I have not covered above because it is again an independent point. You have been reading this right from the days of Contract Act. Now there is a lot of dispute on this. You'll find circulars on this. What is this dispute? Let us understand, because again, it is an important exam case study question. So what is the point? Agreeing to the obligation. This, according to me, is the most important phrase which is missed out. We only refer to this. What? Refrain from an act, tolerate an act, or do an act. Now I'll tell you what is the dispute. The dispute is where penalty is levied under a contract for breach of contract. Now we have this concept of breach of contract right from our Contract Act days, maybe in foundation or whenever you started reading. You have read this called as liquidated damages for breach of contract. So Contract Act provides that if there is a contract between you and me, let us say you are government, I am the contractor, you had given me the contract for construction of road or laying down pipeline or something with some restrictions, conditions, parameters. Now, if I do not fulfill your parameters or if I breach the conditions, then you have the power to impose some penalty. Now, same thing can happen in any contract. So we have contract between film stars and the producers. We have contract between authors and the publishers. So there are multiple contracts and there is always a clause for breach. So whoever party breaches the contract, the other party has the power to impose penalty, that is recover liquidated damages. Now, in initial days, there is a lot of litigation, there is a lot of notices coming, there is a lot of questions being raised by the department that when they find that you have received penalty, so whenever you receive penalty, you show it generally separately in your books of account revenue. So when they see this additional revenue, they come back to you saying that you tolerated some act. What is that act? That some person did not work as per your instruction, so you tolerated that. Hence, there is supply. However, what they forget is that simply toleration of act is not a supply. Students, please focus on this. This is very important part in reading and interpreting law. This whole point, these are the different activities which are covered. One is refraining, one is tolerating, one is doing. But all these are having a common requirement. You should have agreed to take the obligation of refraining, of tolerating, of doing. Simply, somebody not doing something, that is what is breaching the act, and you are levying a penalty, cannot fall here because there was no agreement to do or not to do this. Understand this, students? And as we scroll down, you'll find a specific circular on this. I'm so happy that they have come up with this circular. What does that circular also says? That what will be covered in this entry will not be anything which is inbuilt into your contract. That will not be covered. Only when there is a specific contract, like a non-compete contract. We have non-compete contracts whereby I ask some competitor that, boss, there is no use we both competing in the same area. Let us divide our areas. You don't enter my area, and for agreeing to not enter my area, I give you 20 lakh rupees. There are similar such contracts where there is an independent contract for not doing something, independent contract for tolerating something. So, where in some other contract, which was for some particular act, there is some penalty or breach clause that is not leviable to GST. When there is an independent separate contract for this, what? Refraining from doing something like non-compete, tolerating an act or situation, then that will be only leviable to GST. Please keep this in mind. This is a very important case study question applicable at final level. Fine, students. So these are different types of transactions for which Schedule 2 has given classification. Is that the circular? No. It is not that circular. That circular is separate, but this is a new circular. It is relating to penal charges levied by regulated entities. Now, firstly, what are regulated entities? So, regulated entities are entities which are covered under some regulations, like, for example, banks, insurance companies, which have some regulations put in by RBI. Now, what is this particular clarification? Now, since banks, etc., regulated entities, they have to compulsorily follow the instructions given by regulator, like in case of banks, it is the RBI. Now, very recently, RBI in 2023 had given an instruction to the bank to discontinue charging penal interest for non-compliance with loan terms. So many times we make default. So banks used to charge penal interest. So on these specific instructions, they were asked to discontinue penal interest. However, smartly, what bank did was that instead of levying penal interest, they converted the same into penal charges, saying that since you are not complying with the loan terms, like you are not making the installment in time or whatever other terms you are not complying, I am levying a penalty, a penal charges. Now the question was that whether these penal charges are in the nature of supply, and what is a supply? Toleration. See, whenever there is penalty, the most common thing that is raised by the department is that you are tolerating something, hence you are charging penalty. Now, I already said that there is already a circular. This is the reference of that old circular, very important circular, which came for the first time, saying that all penalties are not supply. Only when there is a specific independent contract for not doing something or tolerating something, that is what is supply. All these penalties for mere breach are not supply. This is the main circular on the basis of which this recent circular has been introduced. What this recent circular says? This recent circular also says the same thing, that the penal charges which are levied by these regulated entities, banks, are essentially in the nature of charges for breach of contract, and hence they are not leviable to GST. So aligning with the original principle circular 178, this new circular also for this one specific item says the same thing. So in short, whenever there is no independent contract for not doing something, for tolerating something, if there is no independent contract, but penalty is levied because the main contracts provide some breach clause, that will not be leviable to GST. Now that circular 178 has clarified so many things. What will happen in case of all these different charges and breaches which you are liable to pay? I'll request that please go through this. There are very specific points that for ticket cancellation this will happen, hotel cancellation this will happen. So they have given you a specific answer. Now let me take you to the next part of this chapter. We have already done schedule 3. That is composite and mixed supplies, which is the last part in this chapter of supply. Now, after we conclude there is a supply, we go to classification. Correct? We just saw that the classification is it is supply of goods or it is supply of service. But this classification given in schedule 2, which we just studied, is applicable only when there are independent supplies, or I will use the word single supplies. That is supply of one item. Once there is a supply of multiple items, which may be goods or service, then something comes into picture. What is this? The concept of mix and composite. But this concept is wrongly interpreted by many. So let us try to make the right interpretation. So firstly, we are not talking about independent or individual item supplies, because that we have already studied, that it will be classified as goods or service depending upon all the concepts we just discussed. Now let us say what you are supplying is a combination. It is a group of different things, which may be goods, which may be service, or goods and service both. Now in such cases, first we go back to schedule 2. In schedule 2, two such multiple or combination of supplies are covered. One is works contract and one is serving of food, which is your restaurant, canteen, your catering. Now these are two multiple items supplies, because in case of works contract, like same construction example, you get goods also like bricks, cement, steel, tiles, etc., and plus the construction service also. So it is a combined supply. Now what is said, that a works contract, which is a combined supply, similarly when you go to a restaurant, canteen for getting food, in that again there is a combination of goods because there are so many items, and then there is cooking, serving, which is service. So again it is a combination item where multiple items are supplied together. But schedule 2 has already said that you have to consider them as supply of service. So these two items, which are examples of combination of goods and service both in one supply, schedule 2 has already classified them as supply of service, and now they have been treated as one service. So now you will forget that they are made up of so many items. They are treated as one service. Works contract becomes one service, and serving of food becomes one service, which is named at restaurant, canteen, etc. But other than these two, all other items where a combination is given of goods means goods of different types, or services combination is there where multiple services are merged, or goods plus service is given. So example of multiple goods I'll give just for your understanding what I'm talking about. So you buy mobile. When you buy mobile, along with mobile you have charger. Earlier, now this has been discontinued, you also had the headphones. Now they have discontinued this. Also, you have the battery. Now, all this is given as one set. This is the example of combination of goods. Yes, Neha, beta.
So can you please explain the current topic, because my net get fluctuated and I have skipped that part. Multiple goods and services.
Beta, I'm now discussing on those transactions where multiple goods or service combination is involved. Like I gave first example now of multiple goods, like when you buy mobile, in that mobile box. So let us say you buy mobile where the total price is 50,000. You get mobile also, there is battery also, there is charger also. Earlier there were headphones also. Now they have discontinued this. Now this is example of not a single item supply, but a multiple item supply made as one package. Correct? Now I'm
Yes, sir.
giving example of multiple item supply where multiple services are given as one package. So many times when you go to movies, especially during the non-peak hours, like you go to the early morning show, 7 o'clock, or you go on some weekdays like Tuesdays, Wednesdays, then they say that along with the ticket price, let us say it is costing 200, you watch the movie plus you get some restaurant service like popcorn, cold drinks, etc., which will be served to you. Now, this is a combination where multiple services are given. Another example is when you go to a hospital, you get treatment plus you are given accommodation in the form of a room, plus you are given food there, plus you are taken care of by giving clothes, and so many facilities are combined into one service of hospital. This is another example of multiple things supplied as one combination where only services are combined. Now I'll give you example where goods and services both are combined. So you buy an AC. Let us say the costing is 60,000, where it says it includes installation, it includes transportation. So your AC is goods, but it is this 60,000 is including the value for installation also, transportation also, which is service. Now we are talking about what will be the treatment of these items, which I am calling it as a multiple package, either of all goods, either of all service, or goods plus service. Now in this, first, as I said, Schedule 2 has already given answer for two of them. One is works contract and food serving, which they say it should be treated as supply of service. That is done. But for remaining combinations, for which I have just given example, you have Section 8 dealing with the treatment, and it is saying that the taxability of such combinations will be either as a composite supply or as a mixed supply. So whenever you have combination of goods, combination of service, or goods plus service made as one supply, made as one package, you have to come to Section 8. Now, when you come to Section 8, this is the general understanding that either it will be composite, either it will be mixed. Let me tell you, there is one more possibility. It can be independent supplies also. Now you'll say, sir, what is this? See, when you get a combination, I'll now call it as a package. So what I'm saying, multiple items put together, now let me call it as a package. So when you're getting a packaged supply, people are believing that you have to come to Section 8 and compulsorily put it in composite or mixed category. But let me tell you, students, there is another possibility that this package may not be treated as composite, may not be treated as mixed. Rather, it may be taxed independently on each individual item. This is what I want to bring out in this point. Otherwise, the answer is very simple. If the package fits in the definition of composite supply, the treatment is given. If it is fitting in the definition of mixed supply, the treatment is given, which is very simple, that you will understand in next 5 minutes. But before I go to that, let me bring it to your notice that there is a possibility that for this combination or this packaged supply, there is a third tax treatment that you will not consider it as that composite, you will not consider it as mixed, because when you consider it as composite or mix, the treatment is only one, what is given there. But I am trying to put for this point that it may be treated as supply of independent items, means separate treatment would be given. Now, this is what I want you all to distinguish out. How to distinguish out? That is what we have to understand. Yes, very good example given by Geet, that when you go for servicing of your vehicle, this is the best example of what I'm trying to say. It appears that in servicing, whatever parts they are replacing, that is part of the servicing, it is a combination or a packaged item. So it should be either treated as composite or mixed. But as rightly pointed out by Geet, in such cases, even though you are getting a package that, boss, my vehicle is not working properly, I go to the garage, they repair it and they charge me 1500 rupees. But that 1500 is neither composite nor mixed. You have to split it between first the servicing part or the repairing part, which will be supply of service, taxable at 18%. And then for each item which is replaced, whether the chain of that particular vehicle is replaced, whether some bush or some brake or tires are replaced, or whether oil is put, and each one will be treated as independent distinct supplies. So when you go to the servicing, you see the bill, they make separate line items, and independent values and independent tax rates are charged, where few are goods, few are service, and each is having a separate tax treatment. Thank you, Geet, for the example. So this is exactly what I was trying to bring out, that even if it appears to be a packaged supply, it may be treated independently as independent supplies. Now, except for this special scenario which I just said of independent supply treatment, the common treatment is either you treat it as composite or you treat it as mixed. Now, firstly, what is the treatment? If it is treated as composite, then the treatment is for the whole package. Like in my example, this on entire 1500 rupees value, you will take the tax rate of that one supply, which is the main supply in the package. If it is a mixed supply, then again on the whole value of 1500, you will take the value of that supply which is having highest rate in the entire package. So this is how the treatment is given. So the treatment is simple. What is important to be understood is how to classify whether it is composite, mixed, or independent. So treatment I have given. If it is independent, you will treat it separately for each item. If it is composite, you will treat it as if it is the supply of only one item and that one item is the principal item. So you will tax it as per the rate applicable to the principal supply. Like in case of my hospital example, even though you are getting multiple service of treatment, of restaurant, of stay, of using the clothes of the hospital, still the treatment is of principal supply, which is of hospital, that is treatment, and everything becomes zero because hospital is exempt, which is the principal supply. And if it is not composite, if it is mixed, like in case of example is of tire and tube, if you are buying these two things, it is not composite supply, it will be mixed supply, or battery and inverter, it will be mixed supply, then the tax rate would be the highest of the two rates. But there is a third possibility, that this tire and tube need not be mixed, it may be independent. This battery and inverter need not be mixed, it may be independent. So the main point is how to differentiate between composite, mixed, and independent. According to me, that is more important. Yes, Ayush, I'm coming to that point. We need to understand when it will be composite, when it will be mixed, and when it will be independent. For this, we need to analyze and understand the definition of composite and mixed supply. How is composite defined? Composite supply is defined to mean, so this is very specific, nothing beyond this. Supply made by a taxable person to the recipient, where there are two or more supplies. Anyways, it has to be a package, so there has to be two or more supplies of. Most important word is the supplies should be of taxable items. So if it is schedule 3, there is no supply, the combination can never be composite. So it should comprise of two or more taxable supplies or a combination thereof. Most important is it should be naturally bundled. What is naturally bundled? It means that making this package is general trend of market. What is general trend of market? Means these things have to be supplied together, or these things are supplied together. And what is the most important criteria? that there has to be only one item which is superior and the other should be subordinate. Now, taking the example of battery and inverter, taking the example of tire and tube, these can never be treated as composite because of this condition not being satisfied. Because in battery and inverter, both are principal. You cannot say one is superior, other is inferior, because independently none will work. Similarly, in tire and tube, no one is superior, no one is inferior. So these can never be composite supplies, even though naturally bundled. They are naturally bundled because generally they are to be supplied together, because otherwise, practically, when you go to the market, you find tire and tube together, though you can buy independently, but you can say they are naturally bundled. They are taxable supplies. Everything is satisfied, but why they cannot be composite? Because one of them is not main and the other is not subordinate. Both are equal. When both are equal, you cannot call it as composite. But when we take the example of hospital, where you have come for treatment, now along with treatment, I am giving you a room. So there is a accommodation service, that is stay. The food is also provided by the hospital. So there is a restaurant service. Plus they give you the clothes to use for the period you are admitted. And there are so many other services, like there will be some nursing staff who will be taking care of you, cleaning you, giving you the the sponge and all those service. That is the nursing service. Now, if you look at hospital, there is a bundle of so many items. But in this is principal and all are subordinate. We know that these are supplementary. These are not main. Main is this. They are only supportive. Hence, this can be treated as composite. But in all these examples where there is no principal, it cannot be treated as composite. So this is where you distinguish between composite and independent. Because many times people say that, okay, two things are given together, they are commonly given together, you should treat it as composite only. No. See if all are principal or if more than one is principal. Because if you see the treatment also in section 8, we have to tax the whole package by only one rate of principal. Now, if more than one is principal, you cannot apply this section 8. And in that case, you will have to tax it independently. Then when we go to the definition of mixed supply, yeah. Now again, it is means, so it is very specific. Two or more individual supplies. Now, interestingly, just mark the point here. The word taxable is not yet used. So they have not used the word taxable, which was used in composite. Or a combination thereof, made in conjunction with each other by a taxable person for a single price, and which is not composite. Now, in order to be mixed, what is important is, firstly, it has to be a supply. So again, schedule 3, which is no supply, is out of mixed supply also. Because in order to make it a mixed supply, there has to be supply. Yes, it may be of taxable, it may be of exempt, makes no difference. But it has to be supply. It has to be something which is covered under the GST law. And most important requirement, it should be for a single price. Now, if in my bill, if I have given separate values like of battery, of inverter, or like in case which example Meet gave, in my servicing bill, I have given independent values for all the items. Now, since these are both are principal, you cannot make it composite. Yes. And since the individual prices are given, you cannot even make it mixed. That is where these examples will come out of section 8 and it will be treated as independent supplies. So understand this, students. The final answer is very simple. If it is composite, take the tax rate of principal supply. If it is mixed, take the tax rate of that supply, which is carrying the higher rate. But if it is neither of the two, then you have to take independent tax rates. But how to distinguish? This is what is my attempt when I'm discussing this. So I hope you have understood this distinction, because that is the key point. Even in your case studies, they will not ask you the answer, because now answer you have done at inter level. That if this is the answer, if this is the answer. At case study final level, You should be able to say, okay, yes, this is composite. Okay, yes, this is mixed, or it is neither of the two, treated as independent supplies. That is what is the main point. Yes, from my side, I have completed. I want inputs from your side. So this is what students you have to focus at final level. More on the final answer, because now that was already covered in inter, you have to be able to distinguish. Any questions, students? Ayush has a very good question, that whether it is upon the supplier to treat it as mixed or composite or independent. Yes, I believe so, because the manner in which supplier has made the supply or treated the supply, I believe that is the main distinguishing factor. So I agree to you to a greater extent, Ayush. That is up to the supplier. Yes, students, any question in this part? Because this is the last part of this chapter. Anybody, any doubts, any questions? See, beta, I'll again repeat. Ayush, this is an internal document, this updated version. We are not allowed to share it. It will be hosted on the portal in the form of the updated notes. Still, I will check with BOS if I am allowed to share this independent chapter, which is the updated chapter. With their permission, I'll definitely upload. Yes, you are mentioning that is done in direct class, but I'll have to take permission. If allowed, Ayush, definitely I'll upload it today itself. But as far as my understanding is concerned, since this is going to take the shape of final notes, see, it is actually final notes, only the team is in the process of compiling the whole chapter to post it as a whole module. So I'll take the permission. If allowed, I'll definitely share this on the portal. If not, just wait for a few days. You will get this entire updated chapter in the form of your study material. Fine, beta? Kindly bear with me for this. So students, that's all from my side. I hope you are thorough with everything. Maybe it will take some time for you to again go back, read, digest. No problem. We are there. It is not that this chapter is over once for all. You can come back to me with your queries, even in the next class, even in any other session, whenever you want to link it. Though I've tried to link it with further chapters also, but when the further chapters will come, we'll again come back to link with this chapter. So this is an ongoing process. It is not ending with this chapter, but still I want you all to be thoroughly done with this chapter. Tomorrow you have a holiday, even from your other commitments. So please go through this entire chapter, mark your doubts. We can take up your specific doubts from the material itself. Don't worry, even if you don't have this updated material, only except for those 2-3 blue markings which you saw, the material is same. And anyways, those are circular, so that is not going to change the entire concept. So study from the previous study material which is available, make your markings, and also study the next chapter, which will be the topic for the next week. Fine? So that is all.
Good evening, students.
Oh, good evening, ma'am.
Sorry, sir, to interrupt.
No,
good indeed, because there are important discussions,
Okay,
conceptual discussions were going on. One important announcement I would like to make is that from next Friday onwards, classes will commence from morning. Your schedule will be morning, Friday and Sunday, 7 a.m. to 10 a.m. So next Thursday, there will be the class from in the evening itself. But from coming Friday, that is from 1st August 2025, your classes will be on Friday and Sunday morning, 7 a.m. to 10 a.m. Okay?
So, ma'am, just for my clarification and maybe students' clarification, next week we have 3 classes. First is on Thursday evening, immediately next day, Friday morning, and Sunday morning, if I'm correctly understanding.
Right, sir. Absolutely right.
Students, please make a note of this. So next week you have 3 classes. Thursday is evening, Friday and Sunday is morning.
Okay, sir. Thank you, sir. Okay, ma'am. Thank you.
Okay, sir. Thank you.
Okay, students, good night. Please study. Please be in touch with the topics and come back with your questions, and come back in the next class in the same format of discussion. Fine. I really enjoyed this session with all your lively
Thank you,
inputs.
sir. Thank you, sir.
Thank you, sir.
Right,
Thank you,
sir.
sir.
Thank you.
Thank you, sir.
Ashok
Thank you,
ji.
sir.
Ashok ji, thank you. Good night, Ashok ji. My side over, sir. Thank you.
Recording stopped.